We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Hope you guys had a great week so far. We're gonna get right into this. I have been holding off on this celebration for a while, and Andrew, I think, was like getting a little sad by it in the background. A part of him really wanted to share this with the world, and so here we are. I think now it's ready. This is not his magnum opus by any stretch of the imagination. I think it's just his one of his passions. And then Bacon here, of course, we're going to delve through we're going to talk about the, complete origins of this, because the other one is not really a secret or unknown. In fact, you tweet about it all the time. It's it's actually my pinned tweet right now. So it's pretty public that we talk about it. Yeah, not Khan, but because Khan was super, kind of DL, but the other one was Riley.
Yeah.
Oh, but we'll talk about the origins.
It is pinned. Okay.
It is pinned. It's been there for a while because I'm putting myself on that, saying like, yes, this is going to 0. But I think it's only fair that we talk about the origin story of it all. And okay, I guess we can start there. So without bearing the lead, this is it. This is live, Alex. Is this live? Yes, it is live. So
can you do me a favor and zoom out a little bit?
Of course. Wait, what are you talking about? The 1 day chart's all that matters. The
1 day chart is all
5 day chart. What about the 1 month chart? How about the 6 month chart? Year to date? I think we can do better. 1 year?
5 years is pretty nice too.
5 years.
Max.
Oh, max. Okay. But anyways, so what I'm going to do here is I'm just going to ask the questions, guide these gentlemen along with the story. Long story short, we all made a ton of money on this. And so this is more of a celebration point of the stream. And club members, those of you who are in the audience, congratulations on this. I know that a lot of people participated in this one. And okay, so let's actually begin. I'm going to ask the gentleman in the middle, Mr. Bacon Memes. How did this first come about? And I'm going to ask you questions about the origins.
Okay,
our favorite company.
The origins was you referenced your pinned tweet.
Yes.
There happens to be a company that I may or may not have a bearish view and bearish position on. And in doing the due diligence on this atrocity of a company, thankfully with collaborative efforts, Andrew was able to locate this travesty of a company, being Cons Inc. Now, how I stumbled upon this horrible company was notable short sellers, one such as Mark Cahodes. There's a few others that have mentioned this awful company. I look at that and I think to myself, well, let me wait, because sometimes some short sellers can be relatively early. It would appear that they're not crazy early, but what did it for me was the beautiful chef's kiss of a 10K. Because while some people were clamoring, they will not report, and other people were clamoring, oh, they finally, albeit late, reported. It's a perfect 10K. Nothing could possibly go wrong. For those of us that know, and thankfully, Fabio, you've collaborated, that it's important to read a 10K. And while some of us may think an auditor's opinion is stupid, or accountants and auditors are stupid, it's useful for a publicly traded company just to read the most recent 10K and their account, the auditor's opinions, just at a bare minimum, I would hope. And an adverse opinion seems like red flags. Taking a look at details as well as 10K, that where the investor presentation and their 10Q also didn't line up. Just screams something's wrong.
So long story short, there was a lot of smoke,
Yes.
potentially a fire.
Yes.
So I would say that if I had to summarize the finding of the play that we did, it was everyone was crowded around shorting this,
Yes.
and it's pretty heavily shorted company. The put premiums, you're paying, quite a bit in order to get any sort of exposure. But some people didn't really seem to think about another way, except good old Andrew over here. What did you notice? You noticed something. You noticed that B. Riley had something, a filing. What was that filing?
The
13, some 13.
the 13F.
Yeah.
Yeah. So the thing is, and to Bacon's point, by the way, right microphone, right?
Yes.
Yes.
Okay. To Bacon's point, and if you go on Twitter, you'll see a lot of short sellers insinuating that B. Riley is not just a shit conglomerate, which I think it is, but they're also malicious. I tend to think that's possibly true. Usually what happens in malicious companies is they're going to kill off the related parties first before they finally go under, if they can. And so, like you said, B. Riley, the thing I did was I looked at what are the related parties to B. Riley. Well, one is, and the thing is that Cons wasn't exactly just, it wasn't actually on the 13F. So what Cons was, and that's why it wasn't super easy to find, because you have on the 13F, you have like Synchronous, which is owned by, or they have a majority stake in BW, Babcock Wilcox. You have Double Down, DDI. But Cons is a little more unique because Cons is stuff that through loans that they have out to parties and related entities they have exposure to. And so what they did actually was in December, they dumped the most toxic asset they had onto Cons. And so what I did was I went back actually and I looked at what this company had done so just kind of, and this is, as someone said, it was the TISM that was activated in me. I went back and looked at, so they had acquired a company called FRG, Franchise Group. Don't want to get into specifics. You could say it's technically they didn't technically acquire them, but like for the simplicity's sake, we'll say they acquired them. And Franchise Group had bought this company called Badcock. Badcock is a furniture retailer, just like Cons. And what I did was I went back and I looked at, because FRG was a public company, and I looked at the commentary FRG had around Badcock. And the ongoing commentary was, this is a shitco. They bought it, basically what they did was they bought it for $580 million, and they just asset stripped it. They took all the property, all the land they owned. They did sale leasebacks. They just completely stripped it of all the assets. And then what they did was they turned around and sold to Cons. And it's a bad sale because they took a $100 million loss on the sale. So Cons had a gain on an acquisition, which is super rare. And that's kind of like, and going through this filing and seeing, well, they took Badcock and they dumped it off in this Cons company. And I said, what's going on with Cons? And you look like for 30 seconds under the hood and you're like, oh my gosh, this company is just about to implode. Executives leaving, debt piling up, cash from operations going down and down, cash conversion cycles taking forever, their bad debt expense going up. Basically, Cons is a company. It's almost, if you want to look at it this way, it's historically been a company that's almost less of a furniture retailer and more of a financing company.
I actually argue it's a charity, but agree to disagree on that.
But so what's been happening, and this was kind of, I thought, the perfect setup, because what I did too was you have a company that's structurally a shitty company. They were struggling going into COVID. COVID kind of saved them with all the stimulus checks and things like that. I just got us demonetized. Sorry for that. I always forget. But so yeah, and you can see it kind of was dying, got popped up back up, and what's happening now with the low-end consumer, which is who they appeal to, is all of the companies in their space are saying like low-end consumers not buying furniture, low-end consumers not buying mattresses, anything like that. They're just buying like things to survive, basically. And so I kind of looked at this as an over-leveraged company with almost no run room that just got a toxic asset dumped on it. That's heading into an environment that's bad for their core consumer. And so I just turned around and shorted the absolute living fuck out of it. And it turned out pretty well. And that is how this happened.
No, you don't worry. Say it. You shorted the absolute living fuck out of it. And that's actually, this one was such a interesting and a compelling idea that I shorted the absolute living fuck out of it. And we'll go ahead and share some of the B of A data. So you can see what segment was doing particularly bad.
Right.
So one thing, Andrew, what was their best quarter typically?
Q1.
What quarter was not good?
You mean this year?
Yes.
Well, we don't know because they never reported Q1.
Good detail. But what was likely not a good quarter?
Q1, because they were taking on almost predatory loans.
What interest rate was it on that loan?
15.5 and 20% of the principal is dilution.
And I distinctly remember once that was found, that was the blood in the water.
Right, because on their so you're going through the kind of the research that we did on their Q4 earnings call. The CFO says we have 150 million we can or 140 million we can pull on a revolver. We have a $50 million DDL loan, delayed draw loan. And so we have access liquidity, and we have available ABS transactions. And so you look at this and say they should be cash flow positive at the least in Q1, because that's their best quarter. And in like May 22nd, they pulled on that DDL loan. So their revolver is like SOFR plus 3%. So you're talking like 8.5% loans. Well, they do this filing saying we're pulling on the 15.5% loan that also does dilution. And right there, you're like, oh shit. Either someone turned off their revolver or they pulled on all of it, or they're just being idiots. But like option 3 is so unlikely. So you're like, it's either they pull on their entire revolver or someone turned the revolver off. And so at that point, like, oh, they're dead in the water. Like,
I want to clarify about what we were saying earlier about shorting the absolute living shit out of it. I was calling my broker every day.
You should tell the story about how like the broker starts off like being like, oh, like, have you considered puts? Like, go ahead and tell the story because it's your story.
So I have a specific guy that I call, and the first day that I call, I tell him I want to short, shares of this company. And then he, says the whole spiel about the risk. He's like, have you considered, options? And I was like, no. I actually, in this case, I want to short. And at the time, the price was significantly higher. And he says to me, do you want a limit order? And I say, no, market order. I just want to make sure it goes through, is what I said. And then that was the first day. No interaction after that. And then the next day, call up again. Hey, I want to short some more of the same stock. And he's like, oh, okay. Shorts the same. And then, at this point, the price hasn't really moved too much. And then at one point it starts to, slowly crater. I go on vacation. And I'm still calling pretty much every single day. Hey, I would like to short some more. At this point, it's already fallen a decent chunk. And then he goes, wow, I've been following the stock, and well, okay. And he keeps asking me, do you want to do a limit order? No. I just want to make sure these things go through. Because I don't want to play with I don't care about saving the pennies. I want, the position from any price to the lower value of 0 is 100%.
Right.
So pretty much after, I'd say, the second week, he's already like on board. He's loving it by like week 3, week 4. Because at that point, there was one point where it got to like $1.20, $1.10, and it was hovering there. And it had just fallen and just collapsed because there was another YouTuber who he bought Con. And I don't know if you want to talk about his saga, because, okay, I was in Italy, and I remember it was a Friday. I was in Rome, and the members of the Discord were like, holy shit, someone bought Con after hours. Like a lot of money, and a lot of money at that time, because the stock had fallen so much. It was already at $2. Was like $50,000, something thousand. And then so I'm messaging, and I'm like, looking at the situation, I'm like, what kind of fucking dumbass? I literally said, what kind of fucking dumbass literally just burned $50,000? And then I don't know, did you find it, Andrew? Who's the one who found it?
Yeah,
you found him. Okay, so should I pull him up? Should I be that guy?
Yeah. Oh, yeah, be that guy. He's even called himself out, like saying, "Oh yeah, we make memes about him."
So
he probably watches us, I would assume.
I hope he watches us a little bit, because that way he can at least learn. Because my gosh, the amount of money that was taken away from him, it was yikes. I mean, he's a gambler. He definitely is a gambler. I told him we were all nice. We were not, malicious short sellers trying to edge him to buy more or anything like that and make him lose even more money. But let me see the original. The news 1% by Con. Oh, here it is.
Yes,
I think. Okay, I think it's this one. Hold on, let me see. Yes, it is this one. Okay, beautiful. So what I'm going to do is play it and then start all over.
I scooped up 23,441 shares of Cons towards the end of the market day today at an average cost of $2.39 a share. I think they're severely undervalued with earnings on June 25th. I'm hoping for a run up before.
So we saw his order come in, and we were like, what the fuck? Like, originally, I think the members were like, whoa, this is, the sudden buy of orders. And it was in a time where it was fairly illiquid. There weren't many shares trading that day. And then so he actually moved the stock price up a little bit. So, we noticed. And then it was one massive order. Boom, one and done. And then, massive is relative. Right, but the that was the reaction. That was genuinely the discussion at that point. It's like, what dumbass did it? And then Andrew finds it, and then quickly it becomes like almost a mascot of the Crowdstrike. But let me stress, so many members from the club reached out to this guy, told him to sell, told him to get out,
look at the comments.
That idea. Oh yeah. We should.
He usually gets like 2 comments. We blasted him.
And I'm pretty sure like I was on there trying to. I think I was.
Look, these are all members. Members. Okay, this one made me laugh though. Thanks for the free money. There's food.
No, but if you look, like I tried to break down to him. If you even look at the replies, like.
Oh yes, here you are. Curious, what do you think? It's undervalued. Oh, there's Dex. Peak.
But we know what he said, right? He said like if you took out like the last 6 quarters and looked backwards from there, right? It was a great company if you just took out the last year and a half.
He said they've made money every quarter except the last 6.
Yeah, it's like.
I think that's like something to like pause for a second and be like, what? Maybe something's changed.
Yeah.
Past performance is not indicative of future performance. The ending was kind of like the dismissing your reasoning, and I mean, he would have saved, I think, like $30,000. So, and then he actually became the example of. I saw the guy on Twitter. Someone posted the example. I think it was Parrot Capital.
Yeah, it was.
Because you shared the story, right?
Yep.
And so Parrot Capital wrote a big, long, you could say, essay about the perils of, people on YouTube and getting advice from people on YouTube who are completely amateurish, have no idea what they're talking about, and are kind of like disguised gamblers looking for that get rich quick. And so if you're watching, by the way, Mr. Poorman, there's nothing. Okay, so you can always change your trajectory unless I always think like this is kind of like a troll account, and this guy just has this like massive portfolio, and he's just like throwing money at random.
I think he's
stuff.
just a trust fund baby, and this is just all fun.
No, maybe. And then he's kind of just out here, and he's explicitly trying to troll people with like silly trades. But it could be, but I mean, if you're trying to actually generate wealth long term, like this is not the way. YOLOing into shitcos is not the way. And your new strategy of doing the puts is not free money the way you think it is. It's very dangerous.
He also made a big mistake. He was like, "Oh, they're going to report soon, and everything will be all right. All the worries will be, abated," because he saw the earnings date on like whatever aggregate service he was using, and we're like, there already was a filing that they were going to be late, but he didn't know that because he didn't check. And then we tried to explain to him like the date you see on a lot of those websites is just a guesstimate by them. They just look at the historical dates of the earnings and they just throw that on the website for people. Like it's probably accurate for like Microsoft, but for like penny stocks, I mean, you don't know. They just put a date up there. It's not even accurate. So.
And there was that one, and then like this one.
What's that? $2.39 a share.
Cons is hands down the worst company to invest in.
It's not really about this. It's again, the members are in here, and they're all like trying to tell him.
This is a funeral at the top.
Dude, I remember this day though, because like right at the end of the day, someone, and it wasn't a short seller, someone just like flushed the shit out of this. If you look there, you can even see that wick at the end, like behind his head.
Yeah,
I remember this because I was just like, I pulled it up because it was like, oh, it's down, like because we had a joke it compounds down 4% daily for a while, and then I was like, oh, it's down, it's like 4%, and it's just like flushed down 10%. I was like, what just happened?
I love it. This is a funeral for 56 grand. I remember that.
I mean, he ended up not losing everything, but like he lost. I think if he wasn't shamed out of it, which is like kudos to the members who basically were incessant about it, because maybe he would have kept it and he would have went from the 56K to like now probably like 20, not 20, sorry, it'd be like 10 or 7K, something like that, because it fell by well over half. So
seeing you guys all trolling, I'm just trying to tell him, like, based on the financials, this company is not going to do well. Of course, he's like, why do you think that? And I remember I actually responded, but like it never got posted. I think like YouTube put for review, and I don't think he responded to it. But
yeah,
what he completely, I don't know if you mentioned this before I joined, like he completely missed the fact that they do all their credit in-house, because he never once mentioned it. And then you actually could read in the filings how they were valuing some of that credit. And they had this really weird note in their filings where they would call. And so they were collecting the debts too. So they did everything in-house. They would call on delinquent accounts and try and get them to pay. And then they considered that they would consider that like an active account again. It wasn't exactly disclosed how they valued that account though. So like if you're a year late, you call, you get like some money out of the account. Did they just value the entire account as like actively being collected?
Yeah, so it was like
we didn't really know. And
they had a term for it. It was like something accounts. I can't remember what they are.
It was the oddest thing I've ever, like when I read that, I'm like, this is bullshit. Like they're probably not reducing the value of those accounts. if they get anything out of the people.
Well, and it's a very big point because there's also Aaron's is another company I looked at, and the big difference between Aaron's and Cons was that Aaron's had a third party doing the financing.
Yeah.
And so it's like makes the situation so different. And that's why, for example, Aaron's got acquired, because like you look at the business, and if they're not taking the in-house credit, it's like, okay, this isn't, yeah, they're losing money, but they're not levered up like a shit ton. So
yeah, this bankruptcy, I mean, there's already plenty of articles on it.
Mm-hmm.
So it's pretty much just like any day now. And so anyone who's thinking about getting in, it's like, you're kind of, no.
Valuation, Fabio. Valuation. It's cheap. Get in.
It's
Get
cheap.
right now.
For the most part, I think we've all made our lion's share here. And so we've taken our pound of flesh. So this is the empty carcass that remains.
I didn't want to carry puts through bankruptcy because that could be a horror show. Yeah. So I converted some of it. I pocketed most of it and then converted some of it to short. But
yeah, because to answer the question of your poll, I think for context, what made this so amazing was minimal meme coverage on this, with the exception of Mr. Portman. And not to insult the guy, he's not like Meet Kevin, or like Wall Street Bets. So it's minimal meme coverage, minimal sentiment, ample amounts of shares. So you had plenty of choices to go conventional and or puts. Some of us did both. I know I did both. And there were signs like the amount of aggregators kept on saying, "Oh, they're going to report today. Oh, they're going to report today." It's just
it was really funny.
Yeah,
I remember the people really posting on stock twits as well as Mr. They're like, "Oh, they're going to report in the 26th."
Stock twits people. Oh
the
my
stock twits people are awesome.
Gosh, one more clownish than the other. But
well, the other factor that came in for me is like we're like, oh, I want to do puts. So then you look at the open interest, and there was like at 250, there was like no open interest at all. So I'm like, I'm not going to buy because I want to see where does the money land, what strike, and then we saw it hit somebody. There was all of a sudden one day it was like 5,000 open interest on I think like the 250.
Mm-hmm.
So now we know. Okay, now I can see where the money's going, and
that's
tricky with puts because if you pick the wrong open interest that has no volume, even the stock could tank and you might lose money literally.
Right. You're 100% right. And I remember, dude, whoever did that one, they made it like a bandit too. Because like I'm more conservative when I do the puts. I was in like January puts. Whoever did that 5,000, it was like July or August puts.
Yeah.
That person made a boatload of money.
A ton of them. Yeah.
They front run me
5,000.
Yeah.
So, congrats to whoever that was. Like, I'm happy with my return on this, but that person probably outdid us. Maybe not. I don't know. But the other thing I just want to bring up too, one of the things, and I don't think you guys do this as much, but I do this with companies I'm short. I also have like shorting is fundamentally, I mean, there are some risks to it. There's squeezes. There's like the theory of infinite loss. It was like almost all of my position hedged. And so one of the things too, like when you're doing this, if you're worried about like it's technically called upside risk on this, it'd be the upside risk, which is the stock going up. You hedge that if you can. You can do calls. You can find a way to hedge to prevent against, you getting squeezed out or having like insane losses on a pump. So that was the one thing I guess I want to add as well. Is just like, because these things can be volatile. You'll see them pop. I mean, you zoom out, it doesn't look like anything, but some of these pops are pretty big.
Yeah, can you go to like the 1 month or 6 month?
The 1 month.
Sure which one reflects it.
No, I think it's
this one was a 26.
Yeah.
Yeah. So like, that's why I joke in the Discord. I'm 15. Like, you want to be shorting companies, like you're putting your nuts on the table basically, because you can fundamentally know you're right. The company's going to die, but then crazy stuff like that happens.
There was one day that it went
down like
40%.
It
was like 20
one day in the blink of an eye, but it's like you got to hold on. Like,
There's
if you're confident in what you're doing. But
Well, there would towards the end of it, I was preparing for, I told you guys the death throes of a company, which is where, I mean, you had this pretty much beautiful, basically straight line down. Every day it was going down, 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 down. And so we had an amazing time, right, in our portfolios where we had our longs doing really well. So we have our long ideas and they were doing really well. And then our short ideas were doing really well. And even during days when the market was down, actually, what's funny is like even days when the market was doing bad, some of the longs were still doing well, but the shorts were just carrying everything in terms of just like holding everything up and still providing positive days. So it really smoothed out a lot of the performance. But then towards the end of it, part of portfolio management, you want to be ready for like the death throes of a company. And so for me, at least, so I'll give, I guess it's fair to say, like, position sizing at the time. So the position sizing at the time was well in the six figures. And then what I needed to do is to protect the portfolio against several magnitudes of that, just in case there was a violent upswing. But by the end of it all, of course, the value of that position had crushed itself into a much smaller amount. So I was able to not, with an abundance of caution, I could, put, like, let's say if the original value was several six figures, I would put several six figures as far as like collateral. So you would have the margin of the broker, then plus cash. So it would have just in cash, like maybe like 120, 130, and then the collateral from the broker itself, which you don't really want to get into that if you can help it. But, that would be like another 400, 500 right there. Right. So you don't want to get into that, but like that's still like your buffer, so to speak. So you're low margin.
There is one other risk I want to highlight, but go ahead, Andrew.
Well, the other thing I was just going to say was, I guess, know what your broker, how they treat this and what their rules are, because,
yes,
you use Merrill. Merrill lets you use the cash instantly. I use Fidelity. They don't do that.
I was able to go long, short. Yeah.
And Fidelity does, but they don't. Like they release once a week. They'll review and release. I think on Thursdays, a certain amount. But the thing is, like, for example, I can't right now, all of the cons, because I still have some shares outstanding. I'm actually 5x collateralized on it. So because most brokers, once you go below $2.50 a share, that's your margin requirement on it. Members know this, I think, because we all were like, some were asking like, what's going on? Like, why can't I short more? It's down like, from $1 to 70 cents, and it's saying I have no margin available. It's like, well, and so there's a lot of like things to understand with this and just shorting in general. But I think, to your point, make sure you have enough collateral set aside, because stocks do pop. I have one stock I am short that has popped like 20% in the last, like couple weeks. Now, it was very, very small prior to the pop because we thought it could. But, like, they can run against you. But if you've actually done enough research to feel confident in your right that, like, hey, this will happen, because cons did the same thing. You would have 20% pops. You just have to be ready for that.
No, and one other thing is, like, part of the strategy that I like to implement is, like, I like to be the jackal, so to speak, that is looking for the dying animal. So someone's already taken a stab at it, it's bleeding out, and then I'm kind of on the sidelines. I'll kind of wait and I'll add into the pain. So basically, I mean, you can ask these gentlemen here. On the downswing, I was increasing it. So I was seeing it. Okay, the thesis is affirmed. The thesis is correct. It is dying more. And so up until about the $2.50, which is when, again, what Andrew was describing, that's like the cap out point where the broker starts still requiring the in collateral $2.50, even though it falls well below that, you'll still have to keep $2.50 in collateral. Like right now, if you were to do this, just know which I don't think you should, just know that at 50 cents, it is kind of too late. But at 2000, you'd have to put away $2.50 off to the side, or your broker will do that on your behalf. And so you'll trap that capital, you trap that collateral up for just 50 cents. So it's not ideal.
I'm looking at this. Someone asked about Plug, because Plug Power, I think we all know, is like a Shamco. I don't know if we can call it Shitco yet. It's right at that 250 mark, but man, I didn't realize it'd come down that much. Because I knew it was like almost dead, and then it got life back. It's back to $2.50.
Well, remember, there's the other issues we got to take into account. This one was really good in many ways. There was no cost to borrow, plenty of shares available, and the 100%. Short available to short was increasing, not decreasing.
Yes. So also Hydra DM has a point. He's like, reminds me of Peter Lynch's comment on shorting, not on $100, but on $5 share firms. Because Peter Lynch has that quote. It's like, well, it's already gone down so much. How much more can it go down? And the whole time people would ask us like, oh man, cons, you guys got in around like, it was like high threes or like 380. Yep. And we go, there's always 100% to zero.
I thought when I got in around $3, I'm like, I'm going to exit when it gets about $1 and then convert. Extract some of it, convert to short at about $1.
Yeah,
around there.
That is the risk that I wanted to talk about, and how a person can try to work around it. Is sometimes you leave some money on the table, but you're freed up. Like Dan, you stress free with con? I think you are.
Am I what?
Are you stress free with con? Like, do you have any worries that your broker is going to screw you over, or the market will somehow?
No, I'm holding the short until it goes bankrupt now.
Okay.
I want to see the shares just disappear.
Yeah, but like if you're out, you got no stress, and if it's proper portfolio management is done. Like, so So Andrew, you already took the bulk of my risk identification.
Yeah,
I wish I could talk. The Plug Power guy. I've shorted. I don't want to talk about it publicly though. But you're on the right track there, buddy. So I wrote it from $26 to $10. So there are problems in the accounting of how they actually produce hydrogen. You can go look. But
yeah, and I'd argue shorting is definitely just inherently more difficult than going long.
Yeah. 100%.
I mean, the whole market generally goes up over time. So, you're going against the trend.
The majority of stocks will go down.
Yeah,
but there's a lot of issues with that. There's how will they go down? Will they go down in over a time frame and at a veracity that will be in your favor? What would the cost to borrow be? How many shares are available? Well, that contributes to the cost of borrowing as an issue. So,
and I think
there's like most investors, you could probably name 10 companies are going to go bankrupt, but you don't know how long it's going to take, and you never will. It could take 3
being too early can be a problem.
It could take 10 years.
I like Howell's comment here. Sorry.
Yes. So those are the examples of people who will lose money in a bull market, which is a skill. Losing money in a bull market. Which, by the way, let me actually stress this point that someone asked me the other day. It's like how I think it's actually Beater Stocks. If you're still in the audience, you asked me, how is Kemmer's strategy? Like, how is he not punished? And it's like, well, during a bull market, the punishment can be masked or pushed off. So his strategy is terrible because it is severely underperforming, no doubt. But keep in mind, we're in a really strong bull market, and a lot of those products from YieldMax have underlyings that were designed or created in a time period when those stocks are just so happen to be doing really well. So going forward out into the future, if you were to hold them, and he's actually not understanding that it's happening to his Tesla, the NAV erosion is happening because when Tesla had its volatility, when it went down, Tesla got all of the downside. When it went back up, Tesla got none of that. They got just a portion of that. So that disconnect is going to just expand and widen. Again, the only way it happens is if you have a specific movement upwards with at a certain volatility. So
can you pull up the Morgan comment? Millard Morgan?
Where?
It's a little up.
Little up, little up, little up.
The problem people.
Oh, here.
Yep.
Here's what I think. Just want to say to this guy. I think a lot of people, Matt, pretend that they're confident about their investments and tell you they're confident. The truth is they're not, and they didn't do the background work, or they just don't have the balls to hold something if it doesn't go straight up right away. So people mask that they're confident a lot, and you see a lot of people pull out of investments real fast on YouTube and in Discord communities if you're in them. So I think people pretend they're confident about investing a lot more than they actually are. Because there's a short we're in right now, and it's gone again. Like Andrew, there's one we're in as a group. It's not gone well recently, but none of us are. It doesn't matter.
No. Well,
So
depending on which one you're talking about.
Yeah.
There's
You talking about
two.
Riley?
I'm not.
No, it's Dan talking about Riley.
yes,
Yeah, no, Riley, but Riley's IV went up, so like the options
Riley
aren't.
yeah, it's kind of funny. The options haven't moved, even though it's
Yeah.
gone up a bit. But
And like it's funny because I did some funny stuff because I took the IV and like kind of rolled
We
into something
all
else.
did that.
Um,
Oh wait, you rolled it to other contracts or just another investment?
well, I took some off the table and then rolled it into some other contracts, but like I haven't done a portfolio update. I don't think in the community since I did that. Have I?
No, I don't think you did.
No.
But again, it's
Okay.
it's fine. Like
I can push it out. I don't care.
the struggle that
No.
I have is like people are like, oh, what are you gonna do? What are you gonna do? And I talked about it, like I did a write up in the community when it was like what 25, 26 ish a share as far as B Riley goes. And like my money's already like in the trenches. The only thing that I will do, and the only like, because there's a shorter expiration date for like the modest position, that's the only one where I will allow myself some flexibility. The rest of it, I already know my exit strategy. Like either that or news would have to change. That would have to convince me that off my stance and my thesis. But that's just me. Like everybody else, I don't know your life situation, your personality, your risk tolerance, your leverage, et cetera, et cetera. So it's
Well, and to your point, just like I think Dan made a point that's very important is people say like I have high conviction, but then they get shaken out by like just price movement without their actual. And so like what they're saying is I have conviction that I'm buying a stock, and if it goes in the right way for me, I'll still have conviction. They don't actually have like a core thesis, right? And so I think what you need to be doing is if you have a core thesis and you say, if this happens, this happens, this happens, then I'll make money because I'm positioned this way. You need to monitor those things. And if any of those are going against you, then you need to adjust, either say, hey, I was wrong, pull off your long or short position, or just like reassess and say, okay, was I wrong in my analysis? And then, like update it that way. I don't think a lot of people do that. I think most people, they kind of do like a quick 5-minute overview and say, okay, like company seems cool. Sell side says it's going to go up. I'm going to buy. And that's like, that's not truly understanding or having an investment thesis.
Yeah.
Hey, there's the other one. Victory lap, Jesse.
I mean, I'm not gonna. I don't want to take a victory lap on that. It's like one of those ironically, like you look into it, and when I was looking into CrowdStrike and Palo Alto and all the endpoint protection systems and stuff, and
No, we're not on that yet.
oh my god, oh, we're not on that yet. Oh,
We're not on
not
that
yet.
yet.
Not yet.
Well, yeah, we can do a victory
My
lap. on
heart.
that.
Jesse,
Yeah,
you're
I-
already taking a victory lap on me. Oh, nice.
Every day is a victory lap on Andrew.
See, we all have like some divergences and some disagreements. Like it's all good.
So
Yeah, go ahead.
no. So I was gonna say I think what should be referenced or highlighted is that it's one battle to pick an investment, long or short. That's one battle, and that's very hard just by itself. And most people fail at that. And then there's the second battle that even when they do the first part of the first battle correctly, they botch the second battle, which is portfolio management. So then if you do one of those poorly, you're going to underperform, or you have a severe risk of underperformance. Because even, let's say, selection of a security, yes, you picked one right, but let's say you sell too early, you hold on for it for too long. Because some people have, for example, as an example, some people have arbitrary rules. I must hold the stock for 1 year because they think that prevents them from doing the other mistake, which is selling too early. All fair and good. But then what happens if things actually do change? So it's very nuanced. Everything is nuanced. That's what you should also, I guess, just conclude. As a form of philosophy, everything is nuanced. And if you have to structure those arbitrary rules to yourself, just index. And then just stop doing this to yourself. It's not for you. And then just index. But because if you're going to do something like that, you need to come to terms with that it does take work. It's difficult, and most people will fail because it is two battles. And that's the key. You got to do both correctly. If you do both poorly, or one of them poorly, but the other one well, then hey. Palo Alto better than CrowdStrike sucks. All right, well, where are we going to get started?
Is that a transition?
Well, I guess
my bad, guys. I'm sorry. I apologize.
We
Andrew, I bow down to.
You don't bow down to me. Like,
no, man. Cons was awesome, dude. Like,
oh,
Cons was fun. Yeah,
yeah, it was.
We
it
could,
was
you
one
know,
of those-
I said to Andrew, like, you could have conceptually Perry could have gone from 22 to 8, and then you could have gone right into con time wise.
yeah, like
Would have been like
oh my gosh.
perfection.
It's funny because I almost forgot
You
about
could have done
Perry feels like it was so long ago. It was like 3
Yeah.
months.
For context, anyone watching, we had a victory lap on Perion Networks, which is another one we all shorted. We all shorted that one via puts, though.
some of us twice.
Yeah, I was gonna say some of us did that.
Bro,
Like a bandit.
This 6 month chart on Perry just looks like a ladder, or just like it's just like every couple months, like step down.
I'll never forget waking up and looking at just randomly the first stock I looked at was Perry, just totally random, and I seen minus 40%. I'm like, and I was gonna message the group, but I know none of you were awake. I'm like, because it's 6 a.m. I'm like, what the fuck's going on?
I woke up
Am I
from like
broken?
200 messages from you guys. I was like, wait, what? I like had to scroll back like so freaking. I was like, what is going on? What are you? And then you're like,
So-
Perry's down for it. I'm like, oh my god.
My
yeah, it
thing
was my
is-
last
oh
night
my
of
God.
Aruba.
Oh, that's right.
Yeah, I was in Aruba on my last day, and then I was like, "Oh, my vacation's paid for."
That's right. You're like, oh, you guys pay for vacation. Thank you.
I was like, my wife wanted new carpet. I'm like, well, you can get your wish now.
No, I just remember because whenever I have a company, I have like certain updates get sent to my phone, like the filings or whatever. And so I wake up, and one of the filings too would just be like price action, so I know, oh, like it dropped a bunch. So I was like, Perry's down. It was like, what was it, like 30%? 40%.
No, it was a 40%. It was a 40%.
It was like Perry down 40%.
It
I was
went
like,
from like 20 to 12. or
Everyone
21 to
laughed.
12.
Everyone laughed at the aggressive strike of 1250.
I did laugh, and I was wrong to laugh.
Yeah.
It was
Yeah.
funny because like I actually like met you halfway compared to the others,
And I called you a bull.
Yeah,
I called you
called
a
me a
bull. I was like, "You're."
I was
fucking bull.
20, and
Get
then
outta here.
I was like, okay, maybe I should do 15 now. I feel.
So
I
this is
was-
the event we're talking about, by the way, for
Yeah.
everyone watching. This event right here, and it was 40% down in a day.
And I
There
just
was a
want to
certain
say,
person that was fighting us in Discord about it at $22-ish that it was a low value because it was under 10 PE at the time.
Yeah.
what
like,
I do want to say, by the way, on both of these shorts, the important thing is like, it's not just that we made money on it; it's that we made money for the right reasons.
Oh
Like,
yeah,
because like we actually had a thesis. The shorts went according to the thesis.
yep.
I think that's important to test whenever you make money on something. It was like, did I just like get lucky, or did I actually
Process.
Yeah.
right? It's what do we say? It was a process over
versus outcome.
Yeah.
Yep. Well, and it's hard too because on shorts, really, you need the thesis. You need the thesis to be correct, and you need the catalyst, right?
Mm-hmm.
And especially when you're messing with puts, like if you have a good idea of when that catalyst will come, and that's the hardest for me. That's the hardest thing to track down. Is like, okay, what could potentially be the catalyst? Like when would this catalyst hit? Yeah.
Yep, a defined catalyst over a specified period of time is what we need,
Mm-hmm.
and that takes the research.
And
Boy,
for anyone
there
that
was a
wants to
lot.
know, we do have another one with a defined catalyst over a specified period of time. But for that, you'd have to actually be part of the crew. You'd have to be in capital mindset. And so
Oh, that's rough.
That is it. Just
Sales pitch.
It is
It
what
was-
it is.
it was a lot
Link
of
to the
thinking, though.
Discord below.
True.
like,
It just-
comment, and subscribe.
Yeah,
Use the coupon code CON for 10% off the first month.
there is no
Coupon code down 40% today.
take 40% off the price. 40% today.
Clearance sale.
Obviously
Oh, I
joking,
like
I
that.
imagine. It just,
So-
but yeah, like
so-
there was a lot of legwork into this.
Yeah.
Now that we've talked about the, two things that have gone fairly well for me, we can talk about something that's not gone well. We can actually pivot to CrowdStrike.
Okay, so Crowdstrike. What happened?
Yeah, so if anyone's flight got delayed, if anyone's What else
Surgery
can-
got canceled.
well, I wasn't no, I don't want
I threw at.
Oh my god.
I don't want to take credit for people surging. I was going to take all the credit as an owner of the company for the flights getting canceled. I'm not taking any.
Oh,
For
you didn't hear the
surgeries.
news? Crowdstrike decided to switch the structure from C Corp to a partnership, general partnership. So you actually are liable.
Dude, that's so cool.
And you get a
I'm
K1.
partner.
And you get the K1, yeah.
Does that mean I
have
can
fun with
walk
that.
in the building and be like, I own the place?
They actually need you to pay in because they're about to get sued to the ever living shit right now.
I'm gonna walk and be like, "Where's Georgie?"
They definitely ruined my day today.
So it's probably official that CrowdStrike is now responsible to the largest worldwide IT outage in history.
And we
Yeah,
lived
and if
through
you're the premium player, it's probably like CrowdStrike. So CrowdStrike pushed out an update. It wasn't a hack. It was worse. It was.
Okay. I was gonna say, are you coping? Like it wasn't
No,
that
because
good.
Teasing.
Well, because no, it's worse because for a couple reasons. One is it's like you can argue it's better. Like I'm gonna take both sides, but I argue it's probably worse because you could say it's better because it's like, well, it still shows like they're unhackable, except by their own employee, I guess. But it's bad because it's like there probably isn't liability insurance for this, and this is a breach of contract potentially, which means people can cut contracts with no recourse.
Yep, and they can sue them.
Yeah. And so that's the two things that are probably problematic here. Like this is one of those things where, and for those wondering, like I'm long CrowdStrike, but it was a 3% position going into today. It's less than that now. So
I can't imagine why.
I could never make it like a massive position because of the valuation. When I initially bought it, the valuation wasn't as crazy, right? But then it runs up so much, and you're like, okay, well, I'm just gonna kind of chill. I don't know how to feel about this. Like, I just kind of sat on my hands today. I feel like definitely if this was like a large core holding, someone in the community he bought this around the time we did, so he did very well because he bought it around the 90s, I think, or 100. He had a 16% allocation though, and he's like, "Yeah, I cut it." I'm like, "That's smart.
Yeah,
You don't want to be that allocated here."
I think like with the valuation and then how many unknowns there are right now, like because we can't like it's going to take a while for us to be able to quantify how this is going to affect them.
I thought about this, and I haven't looked at how costly it is yet. If you hold this right now, and I'm asking you guys because I do hold this right now. Do you just sit on your hands, or do you sell, or do you just buy some insurance by buying puts? Because you say
Puts are going to be very expensive right now.
Yeah,
they're going to be expensive right
after
now.
the catalyst.
Let me see like how expensive they are, because that was my thought was like you could maybe look out and say, because like the way I look at it, and it might not even matter that they're expensive right now. So like you can go out. You don't have to go out that far even, right? Because basically it's going to be over the next 2 quarters you're going to know. Right?
Yeah.
You're going to know for certain over the next 2 quarters. Like if this business is fundamentally impaired.
I mean, this was already a really, really high IV, high premium stock though.
Mm-hmm.
So I personally, like, without even looking at the options, probably what I would do is it all depends on position sizing and allocation. If this was a huge winner that ran into a very, very large allocation, I would be cutting it back to something that was very, very, very modest. Personally, just because like I'm of the belief that they're really expensive without this catalyst, right? And I don't know.
Well,
I don't know how long this could drag out. Like personally, I don't own CrowdStrike. I'm looking at potentially an opportunity to own it, but a lot has to kind of come out for me to be able to do that.
Right. And I've been on record saying, obviously after today, that record is probably going to change, or my thought is going to change. That CrowdStrike for me was the best company you could buy, like barring any kind of valuation, right? Like it's because I hadn't seen a company in this long actually have their ARR accelerating after hitting like 3 billion. Or what is it? Yeah, 3 billion annualized. Like absolutely insane.
Yeah.
Firing on all cylinders. The issue is, and we've always said this, one slip up and that narrative's gone.
Yeah.
That's the thing.
And this was probably the worst possible slip up they could ever have.
Right.
In my opinion, because if there's a hack, not like CrowdStrike gets hacked, but if there's a big like cyber attack, like they're on the defense, right? So like they aren't necessarily liable for, not catching every little thing, and they're going to be able to pivot and change their reaction to any type of like cyber attack that's going on. But like this is the one thing that is like, you don't want this to happen because you're literally shooting yourself in your foot.
And everyone else has been hacked. So like if they did, it's like, okay, Palo Alto just had was it like 3-4 weeks ago, had a pen exposure. Fortinet I know has. Fortinet has. So like, them having a cyber hack, it's like, well, join the club. Like, well, welcome to Big Boys Club. You got hacked. Happens to all the best of us. Would be like the thing. It would sell off a bit. I don't think it'd sell off that much. Palo Alto got hacked. I think the next day it was down like 2%. I was all excited. I was like, oh, they got hacked. Like, I'll be able to get in at a cheap price. And I looked and I was like, down. What is this? It's a dip for Amazon.
Like we've talked about this before, Andrew, and my stance has always been it's not a matter of if, it's a matter of when. Like
you get hacked.
All of these players eventually, are going to go through some type of breach. They are going to go through some type of negativity. This is a bummer though for CrowdStrike because
I don't think that many. I could be wrong. So because people are saying how many of their high-end customers will consider an actual switch. The issue isn't current customer switching. I don't know how much that's going to happen. The problem is your pricing power just went away. The problem is your pitch, like, we're the best. Like, go listen to earnings calls. It's basically like, pardon like my French, it's basically George Kurtz like getting up, like slamming his dick on the table, being like, we're the best. What are you going to do about it?
Yeah.
Like, that's what it is. And that's gone.
Do you think they breeded a culture maybe of kind of thinking that they are the best and they dropped their guard? They weren't hungry to be number one anymore.
So I was always very skeptical about how they did these endpoint agent updates. And it was one of the things when I looked into them, it really concerned me because they're like, oh, well, it's great because you don't even have to think about it. Like, we just update everything. And I'm like, you just like update everything. Like, you just press a button, go out and update like hundreds of thousands or millions of endpoint agents across everywhere. And like I don't know, coming from the IT background, you're usually doing this in stages, right? And for cybersecurity, it would probably be like a condensed stage of like doing a rollout to a certain number of machines and then expanding on that quickly. But they didn't have, and Andrew, feel free to correct me if I'm wrong, but they didn't have any way for you as the customer to say, hey, no, we want to be able to stagger these rollouts when you do endpoint agent updates.
You're correct.
Yeah. And so typically when you're coming from an IT background, a software background, like networking background, whatever, when you're pushing new code, you're doing it in a very methodical way to try to get small amounts of like systems updated that are varying code bases. So you're testing in a more controlled way than just pressing a button and going everywhere all at once. That is like something that really worried me about CrowdStrike. And I don't know if I talked to you guys about it before, but like that was my biggest this is like kind of scary because if any one of these updates go wrong, like it could.
Why do you think it is that they don't give people the option to do that?
I have no idea. It doesn't make any sense to me.
Because they could, even though they have root access,
Yeah.
they could still do that. To me, it was never really like that big of a concern. Well, I guess the thing I didn't realize either was, so I thought they'd have what's it called? Like staged rollouts. So like a lot of times you roll out a new update, right? And you don't roll it out like to the whole network at once. It's like, I'm going to roll it out to these 5,000 people. If they have a problem, well, then we have, and you also have a sandbox usually. Windows 10 obviously is very widely used still because this was a Windows 10 issue basically. I don't think it affected Windows 11 from what I understand, but like still a massively Windows 10 and earlier, because I'm sure people still have earlier OSs, out there. How do you not have a sandbox that's testing this? Like, people said something like I feel like people minimize the mess up this is because it's like, oh, some people got fired, like someone hit the send button too early. I'm like, well, someone can't just have a send button. Like this has to go through approvals, right? There's got to be like, hey, was a sandbox testing? Like, how did you get to this point?
And this was pushed for Mac and Linux as well, right? So this
Mac and Linux doesn't have the problem though.
Exactly. But what I'm getting at is usually these endpoint agent updates are going to be unique for Mac, for Linux, and for Windows, right?
Right.
So you're in your QA environment, you're doing testing against all of these different operating system variations before you push it, and then you should be pushing it in like a very defined and controlled fashion. I don't it makes me very, I don't know, worried about their internal quality control procedures and deployment procedures. And the fact that their customers don't have any say over it, like that's...
I want to say something that is to Jesse's point that he hasn't said yet. And I don't know if he's thinking, but I'm going to say it. So, a layman thought right here. If it happened to CrowdStrike so publicly, I feel like for CrowdStrike, it probably, you know what? I say that and I think of Boeing. But
I was going to mention it.
Yeah, I think of Boeing. But I hope that, I would think that it would never happen again. And I hope Palo Alto is looking at that and going like, wow, we can never let that happen to us.
Yeah.
Which I think that's going to spark a change in the industry. And I think this is actually good for Palo Alto, which Jesse, how is Palo Alto's product when compared to CrowdStrike? I remember our conversation. You said CrowdStrike's is better, but Palo Alto's isn't bad.
It's not bad, but I think, man, endpoint detection, especially when you're running on the local machine, like looking at those core processes, it's hard to get right. Cortex is pretty decent, but I mean, I have experience with Cortex, which is Palo Alto's EDR, but I don't know, like it does affect machine performance, affects server performance. CrowdStrike seems to be like the lowest, like CrowdStrike seems to have the best EDR agent for local machines, and it's very in the background. It doesn't have a huge effect on performance. I think CrowdStrike is like the best player in EDR, like no questions asked. As far as the tech goes, if they don't blow up the world, like, but there was something that, like, you know, Palo Alto, they allowed the staging and the defined rollouts of like endpoint agent updates, right? You as a customer can define that. CrowdStrike, I think as far as the tech goes, I think they're better. I think Palo Alto has certain cybersecurity offerings that CrowdStrike doesn't, and they have a more comprehensive suite because of that. So they're a better one-stop shop. But as far as EDR goes, I think CrowdStrike is probably, like, if I rated CrowdStrike just on technical, like how their EDR functions, if I rated them at A, I'd probably put Palo at like a B, right? So they're not like they can compete, but they're not going to be like super best in breed yet. But sometimes you don't need best in breed, you just need enough
for an opening like today, because I'm thinking as a manager. I'm the airline COO, CEO. I'm the management team. What happened today is catastrophic.
Yes.
It's catastrophic
if I'm them,
failure. It's like the worst thing I could imagine. My systems all being down, having to cancel flights. Catastrophic.
Yeah. And I don't want to, like, I guarantee you, and I don't know if I can say this on YouTube, people literally passed away, I'm sure, as a result of systems going down. Like there's like there's literal lives potentially lost. I don't even think potentially. I think it's like people said, like there's literal lives lost from this. So like, that's why I said like flights going down is one thing. Like people lost their lives potentially because of that, which like, and you know, it's going to have people look at their entire system and be like, I almost think this is so bad. Like hospital systems are going to say you can't have root access anymore.
Which is like the whole point of their EDR.
Right. Like that's
like the whole point of their EDR is to be able to have that in-depth access to people look at those processes that are happening in real life.
Which is awesome for like
it's great,
hacks.
Right? But like you basically totally lost the trust of everyone in the industry right now.
Right.
And so in cybersecurity, it's called the CI triad. It's basically confidentiality, integrity, and availability.
Yeah.
And the thing that's always bothered me is that nobody really talks about availability that much. And that was like my focus in my capstone on my master's was like, none of this matters if your systems aren't available and highly resilient, so you're able to conduct business. This is like, this is rough. Like, it's very rough. And so my concern right now is that, like, if I am a business leader, first off, like, I've lost all trust in CrowdStrike. If I'm not looking for another EDR, I'm looking at like, okay, what the heck are you going to do? Also, you know, you may have just cost me millions or tens of millions or whatever in business. So how are you going to comp me for that? Are you going to give me your product free for the next 2-3 years?
Lawyers rubs hands.
And no, and I'm thinking, I mentioned to you today in the chat, insurance.
Yeah.
Mhm.
No, it
They're
doesn't
not
cover
gonna
this.
cover. They're not going to
No.
cover this. This is
All-
all on them.
Yeah, all of and that's the huge issue that you brought up was that, all of these companies have cybersecurity insurance for attacks. This was not attack, right? This was a Q&A and procedural issue on a vendor, so all of the liability goes, in my mind, directly to CrowdStrike. It would be very interesting to see the contracts that CrowdStrike has, because I guarantee you that they have something in there that is probably like, hey, we are not responsible for if our systems do not detect a cyber attack or a breach or something like that. I don't know. I don't know if they have language that says, hey, if we push bad code and bring down all your systems, we're not responsible.
I don't.
Right.
Well, to be fair, we're all assuming that those contracts are like 150 pages long.
Yeah, no, I know. Well, and I'm assuming that their lawyers are going to be good, but even if they are good and they're exempt from this, like there's still going to be a lot of repercussions, I think, from a revenue standpoint, from a financial standpoint for them. It's kind of funny because like all those services that Palo Alto was giving out for free,
For free.
right? Everybody like give them a bad time, and now like is Palo Alto just going to get like an influx of like, oh my god, like, well, we can try it out for free, let's just try it out for free.
That's kind of what I was trying to lead the to your point, because like no one could have seen this coming, and so without this, the argument Palo Alto versus CrowdStrike, I think CrowdStrike, they have the right to win. But right now things have changed. As investors, we have to change. And I'm trying to think about this move in Palo Alto is like only 2%. But if they take a lot more customers than we might foresee right now, I mean, that could be extremely bullish.
Yep.
No?
Well, so here's
we'll
the thing.
see. Go ahead.
Well, the other thing is like, just take a step back. Like, this seems bad.
Seems very bad.
Very, very bad.
I like I'm not and Andrew,
no.
I am not one to like panic. I'm willing to dive into a stock when everyone's telling me.
No, I mean, I know you are.
More.
No, but like my thing is, and this is why, like, if I have a lower allocation, it's almost like,
well, for me, it's so small, I'm not going to touch it. But
well, yeah, yours is like de minimis. It's NM.
I don't even know why I still hold it, to be honest. It could like triple, quadruple. I think it would have to like 50x.
Like, as an example, Sentinel one was up like almost 9% today, or 8%.
Oh, that's trash though.
Yeah. Yeah, almost just like pair traded short Sentinel one and go long Palo Alto. But like, because like one of the things I wonder is, I just don't know.
There's so much mud in the water. It's unclear.
I have
not. Mm-hmm.
I have two structural worries about Palo Alto CrowdStrike going forward, and it kind of ties into Milad Morgan. Milad Morgan. Of like, is this a once in a lifetime event, or are they prone to similar issues? Is if they don't correct the systemic problem, then this is probably going to happen again, which would be very, very scary, extra scary. But the other one is, what if they overcorrect? Because what's the reputation of a CrowdStrike? Like, isn't it on the more innovative and really, really fast
Yes.
side of things? Yeah, like if you overcorrect with too much bureaucracy, that is a thing that can happen in the corporate world of overcorrection.
I think you have to correct by CrowdStrike, and this is what I'm saying. Like, their thing was, they rightfully so could just come up and be like, "We're CrowdStrike, shut up, let us do our thing," and like for good reason. I mean, they were the ones. I think, was it 2016 where they really got big for like, was it the DNC that like had issues. They were getting hacked or something. Like CrowdStrike fixed it. Like they have earned their spot, and now it's kind of like, well, wait. So it's just the one thing I just wonder is like, if you're a customer of CrowdStrike right now,
Mm-hmm.
are you really going to switch right now?
I think
Off-grid.
most will not, but some will. But most will not.
I think this is a huge opening for RFP doors, like requests for proposals and essentially testing other systems.
Exactly.
So like if you're in a security position right now, especially from a leadership security position within a company, you're most likely going to be at least looking at other vendors and how like the controls they have in place that wouldn't have caused something like this as widespread and as dramatic as this. And then you're also going to be looking for like how CrowdStrike is responding.
I think the issue for CrowdStrike is less in the current customer base. That I don't think is like, I could be wrong. I don't think there's a ton of risk there. I think that the risks are concessions that they're going to have to make moving forward. So like they are going to have to go back and look at, do we need to do, like what every other cybersecurity company does, basically say, you can choose, you can turn on a toggle basically that allows us to push updates if you want, whenever we push them, or you choose when they get pushed out, et cetera, like staged updates like Palo Alto does. And then in their negotiations, the prices they can charge may have to come down. Like, and the other real big thing is they could get sued into oblivion on this thing, man. Like they have $3 billion of cash on hand. I don't know if that's enough.
And it may not be an issue that we might see, existing customers switch away, but what about that forward growth?
That's what I'm saying, is that it's a forward issue. Like, but here's the thing is, and this is why, like, I'm like very conflicted about, because it happens, you have the issue and this is why I'm saying you're going to know in the next quarter or two, because is what happens. Like, let me put to you like this. So Jesse had the problem already with CrowdStrike, had the way they did the updates. If Jesse's just like looking at, okay, who do I want to use as my EDR? And what? Dog. But who do I want to use as my EDR? And CrowdStrike comes and says, yeah, we met. And like Jesse says, rightfully so, dude, you just shut down the world. Like, why, how do I know that this isn't going to happen again? We use stage rollouts now. Like, you get to choose, I don't know what the official term is for it, but like it's self-directed updates, where you get to choose when the updates roll out. Also, like for the next, we're going to cut the contract from 36 months to 12 with the option on your end to go to 24, an additional 24 months at the same price. And the price is like 10% cheaper. That's probably how the talk's going to go. See, like from a customer acquisition standpoint, I think if you're a smart person, like you think, okay, this is a one-time thing, you may still be able to get the same amount of customers. The thing is it the next 12 months that you have lower revenue growth? Or does this just mean like the business is going to have like, they just lost their place as the number one? Like, I think I'm trying to, because my thoughts going in, when I say initial, I mean like the first like 2-3 hours of looking at this, my initial thoughts are like, could be very catastrophic long term. But like, I'm trying to kind of build a narrative where I say like, is this what happens and they end up being fine long term, I guess. So I guess that's kind of my question. What do you guys think?
For me, the water's too muddy. I have so many
But
ideas.
muddy
for
water
another-
makes fish easy to catch. Isn't that the?
Perhaps.
Well, catfish, I haven't enjoyed
Sorry. Okay,
smoking
sorry.
outfish,
But go
but
ahead. Sorry,
I think like they just started bleeding a little bit. Like, let's wait till there's really blood in the streets.
Yeah, this isn't blood on the
like,
street. This is a
But
retracement.
no. That's why you asked the question now, though.
Yeah, no,
I'm talking about as a holder.
Oh, as a holder?
Oh, as
Oh,
a holder.
I don't have that problem.
If this is for me, if this is a 3% position for me, I'm probably not going to care that much.
I
honestly.
don't. But
if it's a 30% position, I'm going to care a lot.
Well,
right, and I'm going to cut it drastically because there's just too much risk baked in and uncertainty over the next like 2 to 3 quarters.
Yeah, and I think we talked about this. Like, it's the reason I could never make this a 10% position. I could never, like, just the valuation and like what was cooked into it. But like, to me also, I was like, this company I thought had the chance of them, and I think this narrative was still going, that they could have had a CAGR on that revenue top line, especially with like next gen SIEM, to grow 20% for the next 5-10 years. So
yeah.
All right, I'm actually going to throw the question back at you, Andrew.
Mm-hmm.
For roughly 3-ish% of your portfolio, do you see other opportunities that you like more than CrowdStrike long term? And you don't have to answer right now. Like, the audience, is.
The issue is on 20% cash right now. So
you could be 28-ish.
So
or again,
Crocs.
Yeah. So I mean, like,
oh man,
no, I guess like I'm just kind of chilling.
It's hard because this is an industry that's going to have so much tailwinds over the next several decades, right? And this is why I love this industry and why I want to get like solid positions eventually established, and why I've been trying to do that. In higher quality players, it's just like I don't know, I don't know.
Well, and that's why like 3%, because if they regain where they're at, I mean, you're talking 5 years from now, you're just kind of like, okay, whatever. Yeah, that one thing happened.
Yeah.
Kurtz is like laughing about it, on an interview, like, oh yeah, that was a rough time. Like one of those CEO.
One time the intern took us down.
Dude, George is gonna know the name of like the 3 or 4 people who approved that rollout, like for the rest of his life. Like,
yeah, he looked really shaken up. He looked really shaken up.
Did you see the video where like he couldn't even talk?
Yeah,
I know. I didn't.
He's like,
you sent it. I didn't get a chance to watch it yet.
Let me pull it. Let me pull it up.
I know the exact time too, where you can pull it. It's like go right to the 2-minute mark.
Trying to find it.
Okay, so with that being said, right now,
can you resend the video?
Do you just swap out CrowdStrike for Palo Alto?
Is it worth the tax hit?
Yeah,
that's true. That's true.
Is it worth the tax?
That's a very, very good point.
Because I'm not gonna have losses to offset that this year, I don't think.
Yeah, I don't see the video.
I'll get it right now. Yeah, go right this video right at like the 2-minute mark. You can start. Private chat, I guess.
Yeah, that's fine. Okay. All right, took me right to it. Share this tab instead.
So this content update went out, and as it does, and it's been doing for many, many years, obviously we've got a robust team that's looking at the safety and security and the quality of these updates, and we have to go back and see what happened here. But if there's a negative interaction with the way some of these operating systems work, in this particular case, it was only the Microsoft operating system that was impacted, you'll see a reaction like this, and this is what we've seen here.
Yeah, they. I think a lot of people woke up and wondered if something
Maybe I put it too far. No, I think it's no. Keep watching.
Attack, but you're saying that it was just something within your own system. So now, as we sit here, I was watching the news out of Australia. They were trying to get their television station back on.
Did you start at 2 minutes or 3 minutes? Because I said 2 minutes.
Two something. It took me right to, I think, where were you?
Was it that one single software bug can have such a profound and immediate impact?
Well, when you look at the complexity of cybersecurity, you're always trying to stay one step ahead of the adversaries. Excuse me. Man.
Oh, man.
Take a drink of water.
Yeah, sorry.
I'm sure it's been a long night.
Always trying. It's been a long.
Yes, watching that again.
Oh, that sucks.
You feel bad for him. You're like, oh, that's a tough spot.
I feel bad until I remember he has his own F1 team. He's worth.
I feel bad, and then I remember he's crying with his no.
Well, how much of his net worth is tied up in CrowdStrike, though? To be fair,
and to be fair, he is also caring about his legacy, what he's remembered for. This is
for
his
sure.
baby, yeah. So
and I mean, yeah, I mean, like, I don't care who you are. I don't care how much money you have. This is a stressful situation.
Oh yeah. I mean,
dude, he was
have so much.
He was tweeting like an hour ago. This guy probably hasn't slept in like 48 hours at least. 3 hours ago, he posted a tweet.
I mean, their product is amazing, right? Like what they do is really, really good, and you know that everybody there has a lot of pride in what they've been able to accomplish, especially him, right?
Mm-hmm.
So like this is just like it's far beyond, like I don't know, losing some money.
Yeah, and so, but like as a whole, that's why I go back and forth. I'm probably just gonna sit right now, like I said, sit on my hands. This, I don't think it's not gonna go to zero, even if it went to zero though.
No,
it's not gonna impact my
very unlikely
performance.
What if the best short this year was CrowdStrike going to zero?
That'd be so messed up. That would be
no, I mean they're gonna be fine. Like the only way that they get really, really, really destroyed is if some humongous lawsuits come out and they literally have to, like, I don't know,
borrow money to pay it.
Yeah.
The shoot, what was I gonna say? CrowdStrike. Oh, the biggest short thesis to me on CrowdStrike right now is that Kathy Wood bought it today.
She bought it.
Yeah,
she's due for a win, guys.
She bought like.
Oh
my god!
Before we forget, I just want to take this time to let me pull this up. This is ridiculous.
He's overdue.
She deleted it because it's such a clownish thing to say, but thank God people, save things. So let's go ahead here. So I shared this on my Twitter.
38,595 shares of cybersecurity from CrowdStrike purchased by ARK.
All right. Yep. I'm going to read this out loud. As a result, our trading-related capital tax losses should offset trading-related capital tax gains for years. An underappreciated asset associated with our strategies.
For those that so much money that we won't have to pay taxes for years, guys.
To be fair, was this a Fog Cutter Capital special when they did a merger, and one of the benefits Fog Cutter said, like merging with Fat Brands, is like, oh, we have a delayed deferred tax asset.
Yeah.
That was the reason. Yeah. And it's like, so basically it's like, this company's so crappy, all it's done is lost money. It's an asset.
Yeah, we've lost so much money. It's an asset at this point.
If we ever make money, it's going to be great, guys.
I thought the thing above this was more funny, where she basically said, like, well, if we would have known NVIDIA would have made very good.
I'll pull that up too.
I was going to say, she's trying to make up for selling NVIDIA at the bottom. Now she's going to buy CrowdStrike at the dead cat bounce.
All right, so I'll read this out loud. Our strategies are behaving like value strategies during the tech and telecom bubble in the late 1990s, and like growth strategies during the early 2000s. By the way, she was there. Both periods set the market up for revisions to the mean, significant reversals to the upside. Before selling Nvidia in ARK, had we known that the market was going to reward it and the other Mag 6 stocks to the exclusion of stocks that will be the greatest prime beneficiaries of AI, like Tesla, the largest AI project on earth, the multi-omics names, or I said multi-omics names like RXRX, we would have held it.
So, calling your shitco's value is pretty, like, comparative value is pretty wild. The other thing I don't get, she's like saying Nvidia doesn't benefit from AI. Meanwhile, you look at the P&L and you're like, I see a very direct correlation here. I have not seen it yet with Tesla. So
you know
like,
what's really funny?
What?
Like, she's so bullish on Tesla, and literally Tesla is a huge customer of Nvidia. And Elon Musk has said, like, we can't get Nvidia chips fast enough. Like, if they're the biggest AI network, right, and Nvidia is the biggest AI chip supplier, like, what's she thinking?
It's coping and seething.
Coping, seething.
Cabana.mp3.
Tax loss harvesting.
But like, yeah, I don't know, man.
It's like that one retail investor who I remember him saying, "Oh yeah, I lost $10,000 on purpose so I could."
Well,
that's a very interesting strategy.
To me, like the whole thing, the worst one of these is like for selling Nvidia, and because just to set this up, right, this is supposed to be a fund that's like future. They have like a chief future officer, some weird, and like, so you're paid to hit this. Like that's what your fund is supposed to do. You sold Nvidia at the bottom, and then you just kept on pounding the table like Nvidia won't profit from AI. Meanwhile, they're printing billions and billions and tens of billions of dollars from AI. And then you're saying like, no, Tesla's the winner from AI while their sales in decline and they're going to like negative cash flow. Like, that's just, yeah.
Basically 0%. Oh, fees.
Yeah.
All right. So final thoughts on CrowdStrike.
Final thoughts on CrowdStrike. Yes.
Before we move on, what do you guys think? How do you guys feel?
All right. I guess we'll just do it to keep it organized, top to bottom. Mine's simple. I'm not going to do anything. I'm going to stay completely on the side. I'm not going to buy more. I have the opposite problem. Not enough money. Too many ideas.
Yes.
Bacon.
Same. It goes on the back burner of the radar, just like alcohol companies.
Andrew.
I'm going to sit in my hands. I hold it. I'll continue to hold it. But that if data comes out where I'm like, oh, this is bad, like it's gone. Like, but right now, like it's still in the just kind of sit back and wait.
Jesse.
So for me, I think I still think it's a really high quality product and high quality company. And I am going to just be seeing how this plays out and potentially looking for an entry, but I think it could be, like we discussed, quarters. So a lot has to shake out, but I think it could potentially lead to a good opportunity. But for now, I'll be sitting my hands, kind of just patiently waiting, seeing how it unfolds.
Beautiful. Okay. So the next topic is actually one that is more of a game of sorts. It's open discussion, and I had a question or two that I starred, but it's about cheap stocks. Now it's kind of fair game as to what you think is cheap, but there's a lot of stuff that is debatably cheap. I'm not talking about necessarily like I'm not going to try to be biased and say the ones I'm buying. I'm actually going to go out of my way to not talk about the ones I'm buying. I'm going to try to talk about other things. So just for fair warning, I'm going to just be discussing other things that I do think are decently cheap. But for full disclosure, I may or may not be buying them in the future. So again, similar issue of not enough capital, too many ideas. So good problem to have. Okay. So before we go to that, I'll answer the question. And this one I found interesting because you spammed it. He knows how to do it. And by the way, we made a joke because we enjoy your comments. It's very much like how we say we say it in a loving way. You're like a dog to your name. You're like, ah, ah, ah. So it works. Okay, it clearly works. I do end up seeing it when I turn my head. It's like meta's like 50 times.
It's like anyone that has a dog knows, like when there's a particular ball the dog wants, nothing distracts it from that ball. It's just like
play.
Yeah, that's it. So
heat-seeking missile, firm missile.
Let me just say, it works to the point where I look to my right and I see the chat. And I'm like, oh, there's definitely a lot of enthusiasm behind this. I got to answer it. So is meta finished? Absolutely not. And I saw some of the others like TikTok. No. In fact, I actually ended up buying more meta today. The last time I bought meta was on the prior dip. And this time I actually sold some put contracts and also then bought shares. So a little bit of both. I think that answers that question, though. No, it's not finished. All right, no
back.
So, I guess we'll start. Oh, Crocs is cheap. Do you think Crocs is cheap?
Much like how I struggle with one of the other positions that we've earlier mentioned, my cost basis is very, very nice compared to even where Crocs has been downtrending. So I'm fully allocated, and full and fair disclosure, people already know this. I have an insurance position against it because historically, not only is this a volatile company, but Q2 has been the one where recent history has shown they underperform and usually offer downgraded guidance. So long term, I think it will work out. It's just I know that it's grown so much relative to port that I'm not trimming. I just want to have an insurance position, which I have. So take it for what it's worth.
Yeah, I think Crocs is cheap still even now, but the preliminary data that we were seeing or talking about was indicating that this quarter may not be too good, but the price may be reflecting that ahead of time. And so, we had that conversation. You ended up buying that insurance. Yes, you did. And you're enjoying that insurance. And then what I did is I actually sold. I kept my common stock, and then I sold the put contracts that I had sold. I bought back because they were already sold. I bought back the put contracts that I had. I was up a decent amount on them. And back when the price of Crocs was in the 140s, close to 150. So I want to wait and see if the earnings turns out that, maybe it was priced in, because again, it is seemingly reacting ahead of that. But we'll see what happens, because if it ends up falling with my common stock, I plan on doing, absolutely nothing, but maybe I end up, selling some more contracts on that. I don't know. So far there's a lot of other cheap stuff out there too. I don't think that some of the classical retail stocks are cheap, the ones that everyone, spams about incessantly on the internet. I won't say their tickers because we get a lot of complaints that are like, wait, you know what? No, I'm not gonna fold like PayPal. Like PayPal's not as cheap as it might seem. It's cheap, but like there's definitely like cheaper out there. I'm not gonna say it's expensive. In fact, actually, I'll be transparent, as I do have actually an expressed long position in PayPal, but just not in the common stock. For example,
you're just talking about PayPal right now.
Yeah, but we're not going to spend too much time. I just mentioned it. Walgreens Boots Alliance. Oh my god. Oh,
Who said Walgreens Boots Alliance?
you know what's funny, right? Because we have a weekly call from 2 years ago, and you know was one of the topics?
Walgreens Boots lines.
It's in the it's I went back to it, and it's actually time stamped and everything. Walgreens more likely a short, and we went through like why it was shit. This is a long time ago now,
Brilliant.
but it's one of the old ones. Of course, I didn't short it, but it was basically we spent about
Should've.
I think 30 minutes. No, yes, maybe.
Well, in retrospect, because it went down a lot.
Yeah, but I don't think it was it would have been wise either way. Because I don't know what I know now back then. So I think I did a good decision. At least the decision was to avoid it. It looks cheap. People might think it's cheap, but it wasn't that cheap. There's plenty of like opportunity in some. Well, actually, a lot of stuff has rallied, sadly. So I'm going over some of the names in my head, and
that's up.
Yeah, exactly. Like I'm thinking, no, that actually rallied, that rallied, but they're still fairly cheap. Okay, so like boomer stocks that I think of that are relatively cheap. You still have like McDonald's, I think, relatively with a huge asterisk on it, because you can definitely find cheaper than McDonald's, but relative to its historical valuation, it's actually looking pretty decent. It probably deserves that higher multiple. So I don't think the multiple contracts to 15. It could, and if it does, makes it more compelling, all else being equal. Pepsi, Hershey's, these are ones that people are talking about. So these are not unknown. Trying to think right now of
do you guys know cheap, high-ish quality stock that rallied insane, like you were saying, but DR Horton, like they had interest rate tailwinds, and then I think they release earnings, but
They did.
I think they're up.
Yeah, they had.
I think they're up 30% in like
DHI, right?
Yeah.
Yeah, I was actually kind of interested. So I was looking at their earnings. I didn't think it was like that impressive. I didn't listen to the call though. It looked like sequentially the year-over-year decline in housing increased, like in housing starts increased, which means like sequentially it like seasonally adjusted, because who knows, but sequentially the housing starts decline, which is kind of interesting.
Oh, you know what it was? So they beat estimates and beat guidance, and then authorized a $4 billion buyback.
What's the size of the company?
50? Is it 50?
Okay, so like a 12%.
57 billion.
Oh, okay. It's about a.
So a good chunk.
Yeah.
Yeah, it's pretty. That's a decent rally. But I guess in kind of adjacent to this, you had these are some that did rally, but Builders First Source seem to have bottomed out. So that one's not talked about all too much. Some parts, if you look in finance, the finance sector has actually done pretty well. You throw a rock at a bank, it's done really well. No, yeah, genuinely, you throw a rock at a bank. Of course, one time I'll mention it. The SoFi people will be like, "Oh, we're uncorrelated. We're going up because the fundamentals." The market's finally realizing it.
That's cute.
It's finally realizing, whatever.
Fundamentals.
But yeah, you map it out next to the regionals banks index, and it's there. Looks like they're going up together. And then REITs have also rallied, depending on what REIT you own. Some have rallied more than others, and that's all due to the discussion around interest rates. Trying to think of anything else that's like,
it's
Warner Brothers.
Two companies. Well, okay, I was going a completely different direction.
Go for your direction. We'll go to Warner Bros. Right after.
the two stocks I was thinking of is Packard and Cummins.
Oh, good old Cummins.
If you think the real economy, which is coming back online, these companies aren't, I don't think, still priced for that. So, Cummins looks like it might be slightly, still within its range, but a little expensive. I think Packard is we're looking really cheap right now. If I remember, let me just double check to make sure before you quote me on that.
It's barely rallied.
What?
It's barely rallied at all. Packard.
Yeah. So, depending on what's going on, I haven't dug into these that much, but I've followed them before. Too bad Dan's not here because he's an expert in these. So he'd be able to tell me right away if they actually are cheap. But I think those could be interesting.
Well, Packard is going to be tied to trucking.
Yeah.
Obvious. I'm not stating something profound. Cummins is also going to be tied to trucking too, but not as sensitive. So the sensitivity is going to be slightly less, but still. Hey, Allison Transmissions.
Yep.
I thought you said we're not talking about stocks we've bought.
Fuck, I forgot.
Shout out Hayden, you made out like a bandit, you absolute madman on that one.
Andrew, that was a good call. I thought we were not talking about stocks, but.
Oh, never mind.
What?
No. You can still talk about Warner.
Dude,
I don't see why not.
No, we can't talk about Warner.
You're exposing my whole portfolio.
Can't do it. Can't do it.
Here at Couple Months, we try to
we talked
avoid-
about Crocs, though. I mean, come on.
You guys talk about Crocs? Could have
we did,
gone
yeah.
for that discussion.
Well,
Oof, thank you.
Oh, guess who is no longer a Crocs shareholder?
Oh, you exited?
you.
Good on you. Good on you.
I'll be back again.
And
Don't
you
worry, I'll
sold-
be back
you sold
again.
at the near top.
Like in the 40s, 140s, 150s. I think I took a little bit off in the 150s, but I also had those options that I like. I've had a relationship with Crocs. It's been fun. There was the first time with Commons, and then the second time with Commons and options, and then taking options off, and then eventually taking Commons off. And
for those who don't know,
yeah,
I don't have a problem with Crocs as an investment. I just have problem with Crocs the product.
Hey, you know what I'm wearing right now? Crocs.
Can you kick him off? Ban him.
Mods, ban this man.
Oh man, if I didn't have sold, I could just be like Crocs and Monster, let's go.
Hey, what are your thoughts on this one that all the retail investors are going foaming at the mouth over?
Keep on foaming. You're gonna be foaming for a while.
I think there's really big issues that are being exposed within their product. I said this, dude. I should go back and see. I don't care enough to go back, but I'm almost positive I said trying to go DTC is going to destroy them.
Yes.
They overestimated their pricing and their brand power so much by doing that.
I have to agree with you. I hate investing on anecdotal evidence. Well, I'm not investing on this, any of this, and not at all. But so I'd rarely go shopping, but when I went out with my girlfriend, I'll
wow, look at this guy.
I'll shop.
Girlfriend.
Ooh.
That's when I'll do some shopping.
I think I'm the only single person here. Anyways.
So we go out for a walk, ice cream and stuff, and it ends up we do some shopping. And then I needed some shoes. We go to the sneaker stores, and on the wall, it's two brands dominate the entire wall on the men's and the women's. Guess what they are?
Oh, I know what they are.
Well, actually, there was a third brand. I didn't know what the third brand was, but it was two major brands covering up most of the wall. Hoka's on both sides. Hoka's on. I didn't see a Nike.
Well, And I think we talked about this. The problem with Nike, it was really funny. I saw a tweet, and I should have saved it because it was one of the stupidest takes I've seen in a while. And it had a picture of an On. He's like, "You really think this is gonna like replace Nike?" And I was like, "Well," and I think Ons look good.
I think they look
like
good.
My wife thinks they look good. And then he like zoomed in, and on the back it says like engineering or something on Ons, and he's like, "You think people wear shoes for like the engineering?" I'm like,
yeah,
yes,
Yeah.
that's you wear
Performance
runners
yeah.
to be comfortable. Like the issue with Nike is that they focused on like the design so much, they had really gotten away from the quality, and they could have had lines, you know, that they could have had lines that were maybe not as much performance, but their performance lines I don't think were ever super great. When I was doing more performance stuff with shoes that I don't do now, like when I was in college and stuff, I was always Adidas, but so I don't know. Life is Short is asking how difficult it is to replicate, and all Nike has to do is copy Ons. I think a couple things. One, what?
No, I was gonna say it's like the other way around. Nike has everything to lose, not On.
Yeah.
Well, I think he's saying like they can just make an On shoe and then they're
And then
good.
people will just buy it just because it's a Nike.
Well, the other thing too is like that's basically Nike admitting that On has a better shoe.
Yeah, and also patents.
I was gonna say patents. Yeah.
Dude, Nike trading for what it was never made sense to me. We've talked about it in the past. I think people were on drugs buying that stock. I think retail is again just like, do you really have nothing else? You have no other ideas?
People put this. I think the issue with this was a consumer discretionary trading it as a consumer staple.
Yeah.
Yep.
Yeah. It's a shoe company.
Yeah.
Yeah.
Look, like Crocs is Crocs, but Crocs is in its own lane. Crocs is in its own lane.
But Crocs is cheap. If Crocs is at valuation, I don't think you'd be holding.
Oh
no,
hell no.
No way.
But that's what I'm saying. It's in its own lane.
Right.
In its own lane. On is at its valuation because it's growing like 40%.
Mm-hmm.
Same with Deckers. That's why they're at that valuation.
Mm-hmm.
What did Nike have? Like what did it have? Growing at 2%.
Well, Nike had, they had the brand.
I will fight everyone on that. The brand is not as strong as like a Coca-Cola.
Yeah.
No, but it's still a strong brand. I'll fight you that it's a strong brand.
It's strong, just not Coca-Cola. It's apparel. At the end of the day,
are you trying to
luxury?
Wait. Maybe I'm misunderstanding. Are you trying to justify the valuation? Like you're comparing to? Oh, okay.
Yeah. It's non-luxury. It's not a luxury brand. The only thing that would deserve a multiple like that is a luxury brand.
You know what Nike had?
No,
I know what Nike had. I know it had expansion into China.
Well, I don't view that as a positive.
I don't either. But the market was
saying that or implying that.
I think when you expand into China, you're doing a deal with you know what?
How you do it matters a lot.
Yeah, how you do it matters, and everyone ignores how you do it, and that's why I care, and I won't invest in a company that did it the wrong way.
Starbucks.
Oof, there goes the moving bus.
Look, Starbucks, which I don't hold anymore. Sorry, Ryan. But Starbucks was a triple cross trade, and it worked out beautifully for that time. But then that fucker bought it.
When the indicator moves against you.
Well,
then one of those fuckers bought it, and it ruined the whole thing. And then it dropped, and now Elliott bought in, so now it's up again. But it's not up to the 80s anymore. We'll see, and maybe it rallies from here.
Well, we can talk about this. I was actually we kind of talked about this briefly. It's a weird Elliott play to me. It's not like their other plays that like I know them for. Like, I think we talked about this. Normally, it's taking some aspect of the business, liquidating that, and realizing the cash, and then kind of usually getting a valuation expansion by getting rid of like maybe a crappy part of the business or recognizing some value that was within it. I don't see that with Starbucks. So it kind of strikes me as weird. If you think about it, AJRD, GT, NCR, I think was the same way. PayPal and Pinterest were like kind of separate. What are the other ones I'm thinking of?
Disney.
They weren't Disney, were they?
No, they weren't. They weren't. That was Peltz.
That was Peltz, yeah.
Yeah.
No, just most. There's one or two others I know that was kind of like that same kind of play for a lot of it.
Yeah.
I'm not saying they're exclusively that. They're a big firm. I just don't think Starbucks is cheap enough. Like, if you look at the projected growth, unless you think that, like, obviously, if you're buying Starbucks, you think there's going to be more growth there than they're actually sell sites projecting.
Top line or bottom line expansion?
I think on both ends.
Yeah.
Well, because I think that's kind of the weird thing with them, right? Because Starbucks, I feel like it's hard to get bottom line expansion because their products are already so expensive. Like, their coffee's already... Now, I know Fabio's going to say, no, if you go there and get a black coffee, like none of their customers do, it's not that expensive. But like all their customers get, like a custom drink that's like $6-7. How much pricing power do you still have left to squeeze out bottom line margins? I mean, you could maybe try to find some OpEx leverage.
I mean, relative to other milkshakes and frappes, it's about the same. But no,
Right.
the coffees aren't. The coffee itself is not very expensive. I make my own coffee, but I mean, I don't view a cup of coffee as burdensome at Starbucks.
All right, there.
Well, and I assume. Well, sorry, I said that actually the wrong way. I assume it's not burdensome for the majority of people. The coffee, not like a $10 frappe or however much it costs.
But everyone that's going there is getting that. No one's going there just to get a coffee.
Even better for Starbucks, though.
No, but
if everyone is going for that, yeah, it's good.
But they've been going for that, right?
Yeah.
So like, there's going to be.
No, I agree that it has issues. And by the way, I think McDonald's is a better company than Starbucks, and they trade at roughly the same valuation right now. Fun fact for everyone listening.
Oh, I was going to say McDonald's might be more penetrated. I don't know if that's true. How many McDonald's locations are there?
Starbucks has more. And at the end of the day, McDonald's, they still have 15% franchised, roughly. And they could go for 100% or closer to 10% or 7%, anywhere between that. So Starbucks is 100% corporate owned. You could make the argument that they could go franchise, but that's not within the Starbucks brand. Starbucks prides themselves as being a place that, they can control the quality, and it's a place where people can go to. So that's really important. I don't ever see them franchising it out because then it becomes harder to control the quality. And also, Starbucks from the beginning has elected to do a different style of expansion. So it's not like McDonald's, which they own a lot of the real estate or the buildings. And the way that they make most of the money is not going to be the same as Starbucks. So Starbucks to switch up like that is different. McDonald's, I think, has the secret sauce as far as executing on a restaurant concept. So if I had to make a outward prediction, for the next 50 or so years, I wouldn't be surprised if McDonald's has another brand under its belt. But the McDonald's Corporation is like the holding company, and you have McDonald's and then something else. We're already seeing that with Cosmix. And so like you have the McDonald's expanded universe. It's not very, like out there for this to happen because you have Yum Brands that owns KFC, Pizza Hut, and Taco Bell. And you have restaurant brands. McDonald's for the longest time has just been McDonald's, but I feel as though they're going to figure it out in terms of like simplifying the supply chain, because that's one of the problems that can, you can bring about by increasing the complexity of how many brands are underneath your belt. But I think if I had faith in one of these companies doing it, it would be McDonald's. So yeah, that's my long-winded answer of saying McDonald's business model, the way that their go-to-market is, I think, is better than Starbucks. But Starbucks, it's not like a bad company.
No.
But they're trading at the same valuation, and so you have to actually contend with that.
No, but Starbucks don't get no McGriddles.
Yeah,
that's right. Man, tell you what.
Was anybody able to see by chance like how much of a stake or how much ownership Elliot has?
No.
Okay, yeah, because like for those that are unaware, it is an uphill battle for an activist investor. Like if your catalyst is this, I as Watch the Motor and has plenty of content on that. Just so that way, for the efficiency of time, we can move on.
I just think I think the interesting thing would be like what, like I know when Elliot took a stake in Goodyear, they like put out a thesis, and I like reading through those. I don't know if they've done one on Starbucks.
Yeah.
Those are always cool. I did see a cool question. Someone was asking about Constellation Energy.
No, longer term, I don't really see the longer term. I'm saying shorter term. I mean, it's been a great trade. We actually had one of our analysts, Leo. He pitched it, and it did really well for a period. So since he pitched it early this year within the community, and I mean, frankly, I should have invested in it. He invested in it. I think other members did, and then they did really well. He had two of them, Constellation and Vistra Energy. For a period of time, I had Vistra. I did okay in Vistra. I didn't buy it as early as Leo did.
Good old Leo.
But the conclusion was the same. Like longer term, these are not good businesses. They're just benefiting from a short term massive boost in the demand for their services. So, but longer term, it's not something you want to be involved in. If you really want involvement in that, there's actually a better way. It's more boomer-ish, and I still maintain this because they have like everything all packaged into one. So they have the wholesaling business, they have the standard utility, and that would be like NextEra Energy. However, let me actually check out how it's reacted. If it's fallen a lot because of the Trump probability, then I think okay, so it's kind of consolidating here. But again, it has to, for me at least, and funny enough, I pitched it here. And I got bullied out of it. But no, to be fair, Leo's the one who bullied me, but he was right if I had just listened to him, because if I just didn't buy his ideas because I was like bitter because he bullied me out of NextEra. And if I had just, instead of being bitter about it and just said, oh, fuck it, you're right, I'll buy Constellation and Vistra, I would have just blown out of the park with that, because he blew out of the park with that. So because NextEra has those businesses inside of itself, it's just packaged with the other stuff that a utility would have, like a standard utility would have. So anyways, okay, NextEra right now, is it better than every other idea that you have? Like, really? Well, so that's the problem.
The other thing with Constellation, so back to your point of like, has the business model changed? Because this thing has re-rated a lot. And so the question is like, does it deserve it? It's like on a 2x on its valuation.
Yeah.
Does it deserve that kind of re-rating?
I don't think so. Yeah.
I don't either.
Energy itself is a commodity. It's just who can produce it better. If I can just produce more energy, I can sell it. Energy is energy. And there's going to be a lot of infrastructure build out over the next several years. It's just right now there's a gap. And the sudden gap caused by data center expansion, they're benefiting from that. But I don't think that gap's going to stay. I think that demand's going to be filled. Or sorry, that supply is going to be filled to meet that demand. And then I think it might even exceed it. So I'm not one of the pessimists, by the way, where we saw the articles, United States is going to run out of energy. I'm like, it's not going to get to that. There's going to be a lot of investment in the next several years. In fact, maybe you argue for maintaining an invest. Well, actually, it's already rated heavily, so you would be too late, maybe. But like PWR, companies like Quanta Services and the like, that are going to be the picks and shovels. Overused term, but the picks and shovels of the infrastructure play. I have infrastructure investments. I think most of us have some infrastructure investment that will do really well. What was I going to search up? I was going to search up something coming back from my mind. Oh, yes. I'm going to have to check.
I'm gonna drop.
All right.
All right. Good
Thanks
night,
for being
Jeffrey.
on.
Later, guys.
Good night.
Peace.
See ya.
And he dropped just like CrowdStrike, just boom.
The only difference is he didn't take the entire world with him.
No. Or hit my port.
You're fine.
I know. I'm being dramatic, dude.
Yeah, I was gonna say
It was a
like
3%.
3%. Come on.
Yeah.
Man.
So what does that mean? It affected it like 0.3%.
I was gonna say, weren't you up on the day?
Yeah, up or flat. Like options haven't settled, so I don't know.
Trying to think. There was
Cheap stocks.
I guess I can talk about the accidental massive benefit from the situation with the former President Donald Trump.
Yeah.
Yeah. So with the stock that did really well.
Mm-hmm.
So for those of you who didn't know or not in the club, there was a pitch in 2 stocks, and they benefited immensely and suddenly because of an event that occurred. So it was twofold, actually. So this rally here, I'll tell you how I traded it. So I sold puts. I sold 2 legs of puts, and I generated a good amount of premium. And then I also bought calls at different durations. So the puts were at longer duration, so I received more premium. And then I purchased calls at shorter duration. And so this was trying to basically capture unlimited upside, theoretically, on the long side, and then also generating an additional upside by creating a leg via the puts. So long story short, we won in both directions. I still have some of the puts. I took profits on I had 1 leg of puts that expired in August, and when I pitched the put trade, the August ones were trading at a very nice premium for the $12 strike. And so I did that one. I closed those, so I don't have them anymore, at about 88% profit. And then I also opened one at $14 expiring next year. So they're actually already in the money. And then the calls that I had was a $12 strike expiring later this year. It was December.
I mean the puts.
So no, the calls. So the calls were $12 strike.
Oh, I see. Okay.
I had puts expiring
you sold
in
the 14,
August,
bought the 12.
and I had puts expiring in 14.
Gotcha.
So I had two legs of puts, 1 leg of calls. Okay. So this rally here was actually the debate. The debate caused this one, that sudden spike, and then it rallied the following days. This rally really took things to another level. This one was the event that we won't say verbatim what it was, but it presented a very good exit because the IV was just like through the roof. I exited well over 200% profit on the calls. The puts, at least the $12 strike for August, they basically were already worthless. So again, I exited at 88% profit, and then I'm letting the other ones ride because for those I'm gonna let those decay a little bit more or a lot more. I don't know, because I really don't need to close it. There's not another idea. And I kind of look at the velocity of money as far as like, part of the overall returns. How quickly can I move it to another idea? So even though if it's longer dated, I don't necessarily wait for it to go. And actually, there was a close call with Sterling today. I say close call.
Degen.
It's not degen. I couldn't close them because that tends to be a risk, especially in the options market. You have to worry about liquidity, and so even though I was up a lot on those before on the Sterling puts, I couldn't close them, and today it was like $1 off my strike. So, but I was fine with getting assigned because I wanted to buy more. In fact, since I knew I wasn't going to get assigned, I ended up just buying more with my own capital. So, but yeah, so this is one. I think it's still cheap. It's just not as cheap as it once was.
Yeah.
But yeah, we pitched this here. And then the same time we pitched another stock, TH.
Hey.
So I pitched TH twice actually, but the first time was a case study. And we exited, and this drop was separate, but we exited like here-ish because I just didn't want to continue with the thesis. I thought, there's not much upside, but I'll go through the full story. So this upswing here, it's a good case study for you guys to follow along and kind of observe, but you may not see one of these for a very long time. But essentially, this is a company that got taken public by the private equity firm. And after a while, they wanted to take them private once more. And so they made an offer for $10.80. You notice the price is 10 below that, but we'll get to that because the story starts here. So the offer is made $10.80. It rises to $11.12 and then kind of sells down below the $10.80, but then starts to rally above. You might ask yourself, why on earth would it, be above the $10.80? That's very weird. Usually the market gives you like a spread that adjusts for the risk of the merger not going through. It doesn't go above it. That's weird. So this, again, you may not see this for a very long time, but it happens. And so what this is you have a majority shareholder that's trying to take a company private at a very cheap price. And what has to be done is it has to go through approval through a committee, an independent committee that represents the minority shareholder. That way, if I was in business, let's say I owned 70% of the company and Bacon and Andrew here own the rest. I can't just screw them over and say, well, I'm taking it private and this is the price that I'm going to do it at. And I have 70% of the vote. So screw you guys, because we're doing a simple majority, 70%, boom, and it goes through and I just take it all from them. So this independent committee, the market was basically implying that the independent committee was going to reject it and request for a higher price because the $10.80 offer was too low. So that's, again, what the market was implying. And there were people playing it long. And there was two ways to play this, by selling calls, or you could have bought the comments, you could have bought calls. There was liquidity. You could have done that. I expressed it by buying kind of a small call position. And then I sold it. Then this happened. And, it stayed on the watch list because I still wanted to watch what happened. And we all wanted to watch what happened. We were looking at it, again, like a case study. That's what I presented it as. But when this happened, well, now things get interesting because we still have the facts on hand. And by the way, this is something that, yes, a lot of it has closed. So I am telling the public late, but, it's still $10.80, $9.18 if you wanted to play it. So in this case, when it was around here, well, now it gets really interesting because there's a whole host of ways we can play this. So the implication here is that, okay, we have a limited upside potentially if the committee approves the acquisition price of $10.80. So the way I played it, some people played it buying the comments. You buy the comments, you're good to go. I don't know if anyone played buying calls. I played it a little differently. I didn't really want to commit capital to it, so I sold puts, and I sold puts out of the money at $10, and so subsequently, it's been rallying, and so the value of the puts, because at the end of the day, it's a limited upside. So I'm not going to cry about the limited upside, because either way, if you buy the commons, it's also a limited upside. So potentially.
Double checking, the cause for the price drop was a government contract was not renewed.
Yes. So for both CoreCivic and CoreCivic and Target Hospitality, one of the contracts in Texas was not renewed. In fact, for CoreCivic, I think the revenue percentage was in the high single digits. For Target Hospitality, it was in the mid-teens. And at the end of the day, it shouldn't have been a surprise. The suspicion that we had after discussing it among the community, and Andrew brought this up and emphasized it a lot, that he thinks, I'm putting words in your mouth and you're right here, but just correct me if you didn't say this. He said that they probably did know this. The private equity firm, they probably did know this, and that's why the price of $10.80 was offered. Like these guys probably know this business really well. The contract that was lost was yes.
They own 65% of the company, so and they have board seats.
Yeah,
fair to
they
say
knew.
They know. Okay. So the $10.80 buyout price may be reflecting that they knew that the contract was going to be lost. But by the way, in hindsight, when I wasn't looking at this, by the way, too deeply until after the fact, because now I'm like, okay, now we can maybe take this very seriously. Because before it's like, oh, it's a little cool case study. Now it's like, oh, whoa, hey, we can make some money here. So one thing that if you did the due diligence, I'm sparing you some time here, but that contract that was lost, the price that they were charging was quite elevated, quite high, and it was always thought of that it was going to be temporary. It was never thought that it was a permanent contract. It was an emergency contract during the Obama administration. So it was always meant to be something that wasn't going to last forever. So long story short, these have been rallying because the sentiment is that former President Donald Trump is going to win the election. And so these will do well just based off that sentiment. Nothing has changed in the business. I've elected to not play with fire with CXW. It could continue to rally, and those calls could have been worth even more. I wanted to collect those profits and go long my more serious ideas. I was very happy to do that. What I'm doing is I'm keeping the puts that I think will definitely expire worthless. And then with Target Hospitality, I believe the same. If it gets acquired at $10.80, I'll be more than happy.
You're still holding the puts?
I'm still holding the puts. You can see them in the latest update that was today.
Dude, I never look at your updates. No, because my thing was I cashed out because I had TH comments, and I just thought like the opportunity cost, which, dude, luck. I'm gonna call it luck. Rolling those into WBD was like the perfect timing. Let me tell you. So, but no, I mean, because to me, like the capped upside and like we already realized what I thought was the easy money. I was like, dude, there's no way this thing falls much further here. With like, if you looked at I think the yield on free cash flow with no leverage, and normally these companies have leverage, it was like a 15 to 20% free cash flow yield with zero leverage. With like, it was like 0.2 debt to LTM EBITDA. So like no leverage. And the analysts had already baked in like on their estimates the effects of losing that place. I was like, dude, this is like I thought one of the easiest trades in a while. So just like you knew it wasn't going to be long because like one of two things happens: PE takes it out, or this company re-rates because, I mean, they're higher quality than a 20% free cash flow yield. So
I need to see. All right. So there was interesting point here brought up. Yeah, instead of doing all this, I just like to buy and hold quality businesses for the long term and let them compound a lot easier and just as good returns, in my opinion. Oh, let me just tell you that these are side quests. So 2 live streams ago, Dividend Dude, or you can refer to the tweets. You can see both Andrew and I's performance. Yeah, I'll just say that.
I mean, this is 25% in 3 weeks. I don't think you did that on like buying quality companies. Like,
side quest.
Get the stick out of your ass, dude. I don't know.
Ooh.
Like, anyways, so
moving bus thrown under.
I mean, people have to learn. I don't know. Anyways, moving on.
Yeah, it's not that that's not the core thing of what we do, and that's where the majority of returns do end up coming from. So again, I just referred you to the performance update, so you can find it on my Twitter and you can find it in 2 live streams ago. There's timestamps. Make it easy. And by the way, actually, since then, well, the performance publicly will be done year end, but actually, I think for both of us, it's actually improved by quite a bit because certain things have more moved in the direction.
Yeah, I don't know how Fidelity does the return. Some of it's like funky with the current positions I've opened. Because I think we saw that with like the second I closed out of some of that, the real performance. Anyways.
Oh, because Fidelity might be treating, yeah.
Happens.
For Merrill, it's just instantaneous. It just considers it because I mean I get access to the cash immediately, and so I can go long short immediately. Like I can build a long short portfolio, so I can short and then go long. But
pure alpha.
Yeah. So in theory, right? If things go well, but you know, as we're kind of moving past that, you guys saw how it was like a boomer stock phase, going like for lower beta. All right, so yeah, that's kind of like two unique, interesting plays that kind of played out. Usually, again, when I'm doing some of the strategies with put options, it's companies I don't really care to go long necessarily, or I don't think they're going to be outperformers, but they have the potential to be flatter up, at least in my favor, from the strike. So flatter up from the strike is all I need for the victory. So
you still have the calls and the puts on Core Civic? I don't.
No, I don't have the calls anymore. I just have the
I thought you
puts.
closed just the puts.
Yeah. So and then the puts, they're, I think I'm up like 40 or 30% on the puts.
Oh, that's it. I guess IV spiked. No, because no, IV must have been high. No, off that drop, IV would have been high.
Yeah.
I don't know. I'm just wondering.
No, it's not long puts. I sold the puts. I just need
Core Civic.
Oh, okay. Yeah. Because I thought you said when it dropped. I was like, no.
No, because you sold the puts when it dropped. But I'm saying it's gone up a lot. And I was like, well, IV must be high, but IV would have been high when you sold them.
IV was higher when I sold them.
Yeah.
So I got really good premium for that. I think my break even ends up being in like the low tens. So yeah. And I'm probably just going to hold it to expiration, or at least close to expiration. I want to get somewhere. I'm fairly confident I'm going to get close to the full value of those contracts. The other one I did, there's another one I did recently for a decent chunk of change too. And that one's also recently, because the stock, the underlying has rallied quite a bit. But it's just a company I didn't want to necessarily own. I'm not necessarily that comfortable. I like the thesis, and a lot of the members are invested in it, and I think it's going to do well, but I didn't want to focus capital on it away from my core ideas. So
yeah, there's just a lot of good ideas out there.
It's overwhelming. It's generally overwhelming. It's but it's a good problem. I'm happy to be in this situation instead of being in the situation where I'm like, I got nothing. If that was the case, by the way, you would see me like literally start to cash. But there's genuinely usually something out there.
No, I agree. Also, well, two things. One, that was like 2021 for you, right? That was kind of a difficult. Was it 2021?
2021 Q1 and Q2 of 2021 was difficult. I had for full. I've talked about this in the past. There was like some little portions of my portfolio that I did like some degeneracy with. I played the again, I did not make a tremendous percentage of money for my portfolio because it was a small amount, but the returns individually were decent. It paid for like food for a while. So like I did the Nikola pre-SPAC to SPAC and sold right into that. And I did CCIV, which you know what CCIV became?
Yeah, Lucid.
And I didn't plan on Meet Kevin of all people covering that because I knew about Meet Kevin during those times as like this weirdo who who was like getting into stocks, but he was from real estate. And then COVID started, and then I was talking to my buddy who we both got into this, and he fell for the trap of he didn't put too much money into it, but he was like, oh, it's gonna go higher, it's gonna go higher, it's gonna go higher. He never ended up selling, and he ended up making not much. But me, Kevin talked about it. It was already up a lot, by the way. Me, Kevin talked about it around like $19 a share, if my memory serves me correct. And then from there, I mean, there was one day it was like $30, and then it got to 40.
Did it peak out? Was it 50 or 60? Actually,
I was out before the peak. I was well out before the peak, but it probably did. And my buddy, he was like, no, I'm holding through. It's going to go higher. And then it goes to like something crazy. And I mean, but he didn't sell, so he didn't make any money. Or he made money, but he didn't make that kind of money.
The SPAC era is crazy because, oh, dude, that was such a crazy time. There was someone made a song about SPACs. I wish I could find it. Like, you have a blank check company that's trading at like 5x the value of the blank check. It was
silly. There were three like retail darling stocks that those other two weren't retail darlings. Those were maybe clown darlings, but there was the retail darling that I have an old video on YouTube that I showed my brokerage and like the buy orders, the sell orders for Palantir. I don't currently hold any Palantir actually anymore. I sold the last of it in the not the Charles Schwab, sorry, the UInvest account, which was a paltry amount, but I had a larger sum in Merrill, and that was actually the OG. And I sold way higher than what it is today, because there was, you guys maybe don't remember, or maybe you do remember, that Palantir got to like $40 on that first run. It was wild. Like, yeah, it was wild. So it first starts going public. It went public, direct offering. And then there was a period where it kind of fell. I bought on the day public, and then I bought a little bit after, and nothing after that. And then it just went wild on retail. People starting saying all these crazy things about it. And then I had no idea. Maybe I should have done YouTube back then. I'm just kidding, by the way. But yeah, it would have been an OG Palantard. But no.
Dude, you could have gotten into like all the hype stocks. BlackBerry, Palantir.
No, BlackBerry made no sense. The Palantir was sort of like a speculation on just like the hype that was building around it, but on a more legit company, because CCIV was just trying to play. I mean, your strategy can change a little bit. Of course, I didn't put tons of capital behind this strategy, because this is like more of a fun strategy. It's like, okay, people are being retarded. I'm going to play retardation. So what works in this environment? And again, I don't want to commit a lot, and maybe I should have, because actually it kind of worked. But okay, what is the next Tesla? Buy that now, and then there was the SPAC craze, and then sell it to the bag holder. Sell your bag to someone else. And for both Nikola and CCIV, which ended up becoming Lucid, I should just call it Lucid. Those two worked, and that's the only ones I participated in.
Yeah. See,
but joking amounts of money, if I'm being honest. So
I think 2021, that's when I bought the bulk of my largest position that I currently have.
Oh, yeah, that was, dude. I mean, there was okay. So like, I was definitely capping on that for a while. I say that because Fuhat's in the chat. I normally never use that word, capping, but you were telling me. And he was telling me, and actually that stock didn't move at all really last year until October. And then that thing decides to just double. And I'm like, oh, well, there we go.
No, I remember, because like I think I was saying this stock below, and now I mean, like, obviously I said this stock below 50 is free money. And I kept on saying that. And so every time it did, I would just buy it there because I'm like, dude, it's free money at this point. And you can see it would just like dip right under it and then pop back up, dip right under and pop back up. So, and then like you said, it just decided like, you know what it said? It said rates are going to come down soon. All right. Peace.
And I mean, we're now in a situation where rates may come down soon.
Mm-hmm.
And you're still positioned properly.
Yeah. See, we hold stuff long term.
Yeah. Well, most of my capital is held long term. So, like, okay, on that discussion, I think it's fair to talk about that. So, I view more like of a portfolio management is more so about deciding where should capital be allocated to that it's most attractive. And so in a time where there are more ideas than there is capital, it's always going to be a beauty contest between your investments.
Mm-hmm.
I don't sell to have cash. I'm selling if there's something better.
Sure.
And I have to make a judgment call. You know, this stock is not as attractive as that stock. I'm going to sell this one to buy that one. And that's always, I mean, it is a tough decision. And a couple factors go into play. That's the primary. Then the secondary factor is taxes, because that matters. So then what is going to cause the lowest taxable event? So if I have two stocks in the basket that are both inferior to the new idea, and one of them I have, you know, a big taxable event, and then the other one I have, and I view them as more or less equal opportunity to each other, right? If the one that has a lot of taxable event is not, you know, that much worse or that much better, they're roughly the same, then I'll go and sell the one with the lower taxable event, or even the loss. If it's a loss, that's even better, right? That gives me a little bit, that's better than break even. So, you know, a little more of an incentive, because then I can have that write-off. And then I grab that capital and go to the new idea. And so that's always the process that goes by. And then once you have sort of like the core flowers, I mean, you do kind of just let those go. And when you get to, I mean, if you look at the top portion, the top quartile of the portfolio, you know, there's not much movement, and that makes sense. That's normally how it should be. There's not much movement. Movement is little rare. You could probably count them on your fingers. Towards the bottom, there's probably gonna be a lot. And that's also fairly normal in larger portfolios.
Right.
And then so when you're moving around the same 5% as Doc says, is that really churn? Not really.
I mean, it's just kind of like, it's almost, I don't want to say watch a position, but kind of almost. And then you're saying, okay, you know, I have a better idea, sell out. We do have someone asking about, Keithan's asking about TSM. I think TSM looks pretty attractive here, but like there's I think it's selling off based on the Trump comments, I'm assuming.
Yeah. And I'm waiting on, I make my deployment of capital once a month. I mean, I have well, you guys know I have that event that might happen soon, any day now. That's going to free up a lot of capital. And then I also have the monthly contribution. So with that, you know, TSM might get some ads here. So
I like that you played coy with the event when wasn't that one of the key parts to this entire live stream?
Yes. Yes.
But
yeah, earnings were really good. TSM is one of my larger positions, and I haven't added in a bit. It's I mean, every single tranche that I have, it's definitely lower. So if I were to buy now, this would be the highest tranche I've ever paid for TSM. But I have no qualms. At least I know that about myself. I have no qualms adding to winning positions. I am not price anchored. I have gotten rid of that a long time ago. So I try to help out with other club members, because I know people struggle with that. It's one of the most common things to struggle with, that you kind of go like, oh, but I bought it really low. Like, you know, I can't stomach this price. It's like, no. You got to get that out of your system. That's irrelevant. It should be, what is the opportunity right now? So I don't like too many stocks right now, but TSMC could be an attractive pricing. I agree with you, Catherine. So
I think there's just always the tail risk of
China
China.
invasion. I don't have to worry about that.
I
We
know.
don't have to talk about it. But I don't have to worry about that.
Yeah. Fabio has special shares in the. He doesn't have to worry about China invasion. That's all it is.
We'll leave it there.
Yeah. So. Fabio's
What? Gil, what? I'll take that as a compliment because he's very likely to be vice president.
You know, I don't know about that. Like, I feel like we'll see when the actual. I feel like polling is so inaccurate. I don't like. Do you understand how like polling works?
In America, yeah, I'm aware. Which is why
I call someone, I ask them, who you voting for? And then I'm like, all right, based off this, 300 million people, or however many voters are, 100.
Well, not even that. You just call them and say, would you rather vote for Trump or Biden? Like, for example, it might be botched because RFK may have botched it, but I think Trump wanted to ask RFK to be like in his cabinet to get RFK off the ticket.
No. Do you understand? Okay, well, I don't want to get political here or talk about it, but this is the one thing I'll say. It appears to be the case, and I'm not on either side, by the way. Like, I'm not stunned supportive of either side, but I think I'm on both sides and on none sides. So RFK, and it's a very interesting strategy, but it appears to be that RFK is not a enemy of Trump. And it could be that he's going to still run third party, and it's going to be to Trump's favor. It's going to take votes away from
You
Biden.
think you take it from Biden?
really.
Oh yeah.
Oh okay.
All right.
Oh
fair
yeah.
enough. But keep stocks.
Okay. Cheap
I said
stocks.
Oh, you're out.
Oh no! I thought you were saying like cheap stocks. That's it for cheap stocks. Okay. So I don't know. Let me go find stocks that are like under $5.
God.
So I'll talk about Zillow. So actually, I recently pitched Zillow tentatively.
He even talks like a dog. It's Boba's bedtime. That's how I imagine a dog to talk. I gotta go to bed. It's Boba's bedtime.
Oh, okay. We'll talk about Amazon. I love Amazon. Amazon's very large position for me. I want to make it even larger. There's your spiel. I'll tell you from the big tech. This is the ones I like because I saw your question from earlier. So I am heavily invested in Meta, Amazon, Alphabet to a much lesser extent at this point in time in my life. But I've never sold a share of Alphabet. So it's just I fight against it by not adding to it. So I think those three, those are the champions I've chosen. I don't like Tesla. Don't like it. Too culty. A lot of unclear advantages. I used to be a customer of Tesla. So it's not like I hate the product. I like the product. I stand by that they're the best EV product out there, or among the best. There's probably an EV car that I haven't tried yet. I actually haven't tried Porsche's EV. I haven't driven it, but and the other one, Microsoft's just too expensive. It's too expensive, but I admire it as a company. But yeah, and then you asked what's the cheapest one. Geez, I don't know. It's really depending. Like, because I don't think Meta deserves to have an extremely high multiple given what it is. Again, I'm saying that as a Meta shareholder. And I say extremely high. Like, it does not deserve to get to Microsoft multiple. I've gripe with Microsoft's multiple, but I understand it. Like, I understand what the market's loving about it. If Meta ever sold at that multiple, something would have had to change for me not to sell it. And for full disclosure, as an example, I have capped upside. Mark this down if you wish. I have a capped upside on my Meta because I sold calls on my Meta position. Wait for it. And by the way, I sold it. Good timing because they're down like 50% my calls that I sold. So that means I'm up 50%. And at the 800 strike expiring in. So these I'm giving you the two points. I sold Meta calls 800 strike expiring in November of 2024. that is definitely expiring worthless. But you know, if it was at 800, damn, so much would have had to change. So I would have gladly sold it, all else being equal. $800 a share, dude. I'm like retired 4 times over.
I was always like, oh, I'm retired. I'm retired at this price. Then probably even working.
I need more.
It's never
More.
enough.
More.
It's like that one quote, like the guy's like, some guy, I can't remember, he took like a lower paint job or something. He left the industry, I think, and they're like, he's like, I have what they'll never have. What? Enough.
Wait, what movie is that again?
No, I think it was a real like situation. Like he didn't say it like that, like enough. But like there's I can find the quote.
Damn, that's a powerful quote though. I gotta think about that. I gotta be like, yeah.
Yeah.
Yeah, that answers that question. Is there another question? It's dinner time. Oh, there we go. But yeah, if there's a question I missed, ask it again and I'll answer it. So cheap stock, you found one?
I found an entire industry, but I already hinted at that at the segue.
Boba wants to hear me whisper about Meta.
Go for it.
No, I think one, you're worried about TikTok. TikTok currently exists, and it's not going like it's a potential tailwind maybe, but I don't think TikTok's staying is a bear case at all.
Yeah, TikTok's been around for how long, as far as like popular user growth or the user base?
It's pre-pandemic, right?
Yeah.
Yeah, so
like,
a while.
Like regardless of if the politicians ban it or not, like, and even then the ban, like then that opens up another can of worms and follow-up questions of like, all right, well, what does ban mean? Who owns it? You know, or TikTok USA or whatever. Like,
yeah. So I think that's like some people are looking at that. I think some people are worried about the capex that they're spending on AI and what's the actual return on that going to be. And that's yet to be seen. But I don't think the core business has any kind of problems at the moment. They figured out the big boogeyman, which was IDFA. And now that they're past IDFA, I don't see one right now. So yeah, there.
And everyone's saying Disney is dead. Did it die? Dude, it deserves to die. Dude, Acolyte, they spent $200 million on that trash.
Wait, I'm confused. What happened? Is just because it was at like 120?
Oh, dude, we played that so nicely. Oh my gosh, yeah.
I didn't touch this thing.
But dude, oh my goodness, I remember where I was. I was in a bar on the island in Aruba, and then I get the text.
Listen, I was on a bar in an island in Aruba. I was sipping on whiskey. I had a cigar in my other hand.
No. It was during the daytime, and I was getting a drink at the bar, and I remember who messaged me, and it was like Pelt's lost. It was someone from the Discord. Pelt's lost, and then and then I log into my broker, and I just sold the whole position. Who was it from the server? If you remember who, if it was you, just say it was you. I think it was Dex. I remember it being Dex, but it might not have been Dex. It could have been JC. It could have been JC or Dex. It wasn't Biotex. Definitely wasn't Biotex. But gosh, I think it was one of you. Anyways, yeah, like because they added me, so definitely I would get the notification. I'd be like, "Oh, what happened?" And it was like Nelson Peltz lost. I was like, "All right," and there we go. So
I thought Boba the dog was going to go to sleep.
No, we excited him. No, he's
apparently, yeah.
Amazon, it wasn't you, Dex. Okay, then it probably was JC.
Yeah.
Oh no! It was Alaka.
Good
It
old
was
Alaka.
Alaka. It was Alaka. Because I'm trying to think, like, who are the people that, if something happens, they'll like at me. They'll at me immediately for like news. And I was with Ticking and Hacking. Ticking and Hacking was literally on my left, and then we were both ordering drinks, and I get the notification, I'm like, oh fuck.
Good old Ticking and Hacking.
So, and then that was literally sort of the top at 120, and then fell from there. And I remember there was a guy who I commented on his article on Seeking Alpha later that night. So I went on Seeking Alpha while everyone was getting ready for dinner, and then I commented like, "Oh, they destroyed the content," and he's like, "Oh," his response to me was, "Oh, it's not your grandpa's Disney anymore." And I'm like, then I look into this guy and I'm like, dude, you're like in your 60s. Shut up. Like you don't know. You're not aware of culture then. You are my grandpa. So I didn't say it disrespectfully like that, but it's kind of like he threw the shade at me saying it's not my grandpa's Disney anymore. I'm like, what? You think I'm like, you're talking about your grandpa? It's not your grandpa's Disney? It's like, dude, you don't understand like how bad the content is then. You're watching the new Star Wars. He didn't understand that the new Star Wars is bad. I was like, it's objectively bad, especially like when put side by side by other
usually
content.
when someone says like it's not your grandpa's something, that's saying just to mean like it's gone to shit.
Right? No, he was defending it. He was saying like,
so he was like, you need to get with the times.
Yeah, I know. And I'm like, I'm just like, what do you mean?
Or maybe people that I know that when they talk about it, they always say, because usually like they're like, it's not your grandpa's XYZ, because usually back then it was higher quality or something. But that's
no, he was using it in another way, and I was like, what? So it's like the boomers are destroying this thing. It's not really like Zoomers. It's like Kathleen Kennedy.
Far.
Yeah, Kathleen Kennedy is not a young person.
Mm-hmm.
She is so disconnected from the audience. She has no idea what the audience wants. We're getting into a rant about Disney.
Yeah.
Disney, anyone working at Disney, if you have the ability to affect change, listen. You have great assets, terrible management, horrendous management. You are deciding to fail. Like you're choosing to fail. You don't have to fail, but you're choosing to fail, which makes it worse. That is a bigger L.
Andrew gives a okay. This is like like I don't know. The dog is like
you have a fanboy.
Give it a little pet. Mega cap valuation, just like which ones I think are the most attractive right now.
Yeah, I guess so.
Okay, so I'll just
rank. Can you pull up a Excel model and build an Excel model from scratch?
I'll do Monte Carlo simulation.
Well, after the Excel model, don't worry, we have like 6 hours. So
okay, yeah, I'll build a model, then we'll do a Monte Carlo simulation, and then we'll go from there. And I'll tell you, okay. Like, yes. I feel like my takes. Okay. I feel like my takes are somewhat boring because I feel like this is kind of in line with most of YouTube. Microsoft, I don't feel is very attractively valued. Apple, it's hard for me to understand the Apple ecosystem because I'm not in it at all. So I just don't like.
Boomer.
What'd you say?
Sorry, no.
So like I know some people that like it a lot, but like. And think the stock's undervalued. I'm not saying anything against it, but I just personally, at its current valuation, just based on like what I know of it, I'm not interested. But also like I don't know the ecosystem that well. Nvidia, I don't really touch semis. It's kind of out of my circle. Amazon, I think, is very attractive here. Google would be attractive if I didn't think they had the stupidest management in all of tech. And then Meta, I think, is really attractive here. So like the two that I like the most are Amazon and Meta. I find Google's management so incompetent that like I have Google, but I wouldn't feel like adding here. I just have an issue with how they're running things. And if they buy Wiz, they actually buy Wiz for like $23 billion. That's insane. So Amazon and Meta are probably tied for like number one right now, and then Google, and then the rest of them.
And those are my top two. Meta. Well, not my top two. Those are not my top two positions. That is wild to say.
They were for
a
while.
long yeah.
I have such a hard time with Microsoft's valuation.
It's just powerful.
I can't handle it.
But the thing is, they'll never have a CrowdStrike situation.
Yeah, they won't. Yeah. We have this question, not financial advice, so not the right way to ask it, but I'll say in a different way. Because I cannot tell you what to do. I think that Zillow has different catalysts
No, it's Zoom.
ahead of it.
That's Zoom.
Oh, I'm so stupid.
Yeah.
It's late. I read ZG.
No.
I'd have no opinion on Zoom. I don't have no idea.
I don't have an opinion on Zoom either. I haven't looked at it. It's on a like sell side PE basis, it's super cheap. I think the concern is it's like Microsoft can literally just bundle Teams for free into their Office products, and Google can do the same thing. I don't know what the Zoom's almost feels like it's like that DJ Khaled suffering from success. It's like almost a victim of its own success, but I don't have a hard opinion on it. 18 billion market cap, 7.5 billion net cash, trading at a 11.8x PE. So like
forward.
Yeah.
Yeah. X. Okay.
So it's like cheap. It's super cheap, but I don't know if there's a reason for it to be cheap. I don't know enough about it. Don't really have an opinion.
I can say it this way. That's like a fair response. Again, I don't know much about Zoom or its prospects. Do you have another idea that is better? And that should answer for you that maybe there's something that you can put capital into. So, because I don't sell things for cash like I was addressing earlier. I tend to more or less, because I'm young and I'm producing good cash flows. I don't really need to carry on tons of cash where I want to be like 30-40% cash at any given time. There has to be like a purpose or a reason for me to be holding cash. It's purposeful. It's not I'm selling out of the markets. I don't want involvement. It's not the way I do it. But if you have like another idea, that's a good.
I think it's a better answer than mine. There we go.
Andy Austin, question about Netflix. Is there a risk if they stop producing great content, or is the catalog going to save them in that case? That is the risk for everyone. Everyone must keep on producing content. But
I don't think that is I don't think they make good content now.
That is a hot take.
No, they don't make good content now, and it doesn't matter.
No, yes. They make good content.
Well, I mean, ratings wise, they make good.
Because they are the platform.
Yeah.
No, they make good content. You may not have found what you liked on it, but they make good content. I can give you a couple movies right now that are really good movies that they have made and have shocked me. That I was like, that's a movie Netflix made.
Okay, go for it.
Okay. All Quiet on the Western Front.
Never seen it.
Go watch that movie.
Okay.
And if it's a shame, that movie should have been in theaters. I am upset. I'm pissed. I am pissed that movie was not in theaters. That movie was meant to be in theaters. That is a theatrical movie, very theatrical movie. That the fact that I couldn't watch that movie in IMAX upsets me.
Well, you made so much money from Meta. Why don't you just go buy a theater? And then you can be like, Go ahead.
No.
Then you can say, I own the place, and you can watch it. You
Yeah.
You can walk in like you own the place.
Yeah.
See, I agree with Empress R, and they get the ratings as the distribution size because they are the platform.
No. The hot take. Now, I can agree with that. Reality TV, I mean, they're killing on reality. That was Discovery's. That was Discovery's territory, and they let Netflix take it. And that is the cheapest content to produce that Becky eats. Becky devours that content.
Okay. No,
Super
but
cheap to produce.
what were the other like shows or movies that they made that are good?
Okay. All right. There was that one.
And guys, this isn't gonna be like one of those streams where we talk about like streaming for 5 hours.
TV shows. If you're into horror, Hill House, Haunting of Hill House, Haunting of Bly Manor.
I don't like horror.
Those are actually really
I
good.
want horror. I just look at my part. I'm just kidding. But
Those are actually really good. In fact,
That's such a lie, and
probably the one of among the best horror TV shows ever. And then if you look at that same guy's other shows, they all are pretty good. They're not bad, but it's just like those two of his were like just knocked out of the park. They have some good ones. They're not House of the Dragon good, but they're good. You have Three Body Problem, you have Bodies, you have
let's say
Bodies are
this.
pretty good.
Let's make a good example here. If you look at ratings right now,
Sandman. That's another one.
No, but like if you look at the ratings right now, I think Bridgerton's number one. Like trash. There's like I think like 2 or 3 other Netflix on there that are number one right now, like streaming, ahead of House of the Dragon. Even if you think House of the Dragon is a better show, it doesn't matter.
Well, I don't care what I think.
I don't know many people that think Bridgerton's good. Even like my wife.
Oh
watched
no,
it, and she's
I've
like,
already
"This is
had
like garbage," but
I had this argument last weekend with
yeah?
people who think it's good.
Really?
Yeah, and I said it was a bad show, but they were defending it.
See, like, my wife watches it, but she was like, yeah, it's kind of garbage. I just watch it anyways.
Umbrella Academy, also good. No, that one's another good one. I'm trying to think of the other movies. There were some other movies. Gosh, there were some movies that Netflix made that were. Rebel Moon was not that good. I mean, it's like there. It's not a terrible movie. It's not a bad movie. It's an okay movie. It's not like All Quiet on the Western Front was a good movie. Depending on your taste, the other one, The Pale Blue Eyes, was also, but that's like a grittier, dark movie. That's not a lot of people may not like that. I don't think Glass Knives was. I think Glass Knives was just a down the middle movie, or The Glass Onion. I think, by the way, Glass Onion. I think it's down the middle movie.
Oh no, Glass Knives.
Down the middle. I don't think it's terrible, and I don't think it's good. I think it's just watchable.
I thought it
on the side.
Okay. I like mystery. I hated that because the thing about a mystery show is there has to be like, because if that's the one, you said it's like the Glass Onion or whatever.
Yeah.
A mystery show needs to give you the clues so you could have figured it out along the way. This one didn't let you do that.
Yeah.
And to me, that means it's a bad mystery. That was just my opinion. Like, because I watched it with my wife and I was like, wait, you couldn't know that until the end when he revealed it. And I was like, that's BS. Like,
Peaky Blinders. That's another show. That's
Netflix.
That's Netflix.
No, that is.
At least it's on because I know the BBC. Like didn't the
They
BBC
I think they co-produced it. They put capital into it. There's a
So,
lot of projects.
Yeah,
that Netflix
yeah. Like I'm not to take away from Netflix, obviously, because if you co-produce, you probably get some sort of revenue sharing.
Witcher season 1 and 2, medium to high.
My dog was sleeping, just farted and woke herself up.
Bruh.
You laugh and then you have to deal with the dog fart smell.
No,
Daredevil was another one. There's Daredevil, Punisher. Some people I haven't watched Punisher, but a lot of people like Punisher. Yeah, but a lot of people like Daredevil. Like there's a lot. The thing is, like HBO, you have a few, but it's like it's a few. It's like it's really few. People really like Succession. They liked House of the Dragon. well, we won't count Game of Thrones because it's so destroyed. I literally tell people don't even watch Game of Thrones because there's no payoff. You can't recommend it to someone because if they get invested in that, right now I tell someone I haven't watched House of the Dragon at all, like at all, not even the first season, not the second season, nothing. But if I were to do it and I told someone, I would say, from what I know, I would say ignore Game of Thrones. Literally don't pay attention. Go watch a summary and spoil it for yourself. Just spoil it. That will be a better experience than watching all those seasons and then experiencing that terrible ending. And then watch House of the Dragon in its entirety. Almost the opposite of how it was supposed to be experienced, because initially the House of the Dragons is like a sub story of the main story that you're supposed to kind of, when you're reading through the books, you're kind of like, oh, that's lore building. That's stuff that happened. No, I think like from the show's perspective, experience it the opposite way. The Game of Thrones timeline is the subplot. House of the Dragons is main plot, because that was bad.
But what about Dune then?
Dune?
Yeah.
No, that's movie. I'm talking about shows, because things that keep you on the platform to stream.
Okay.
Succession, House of the Dragon, The Last of Us. No.
You know about good stuff from
HBO.
Dune,
Name it.
did you say?
No, that's a movie. But movies are theatrical releases. You don't really necessarily just rewatch them over and over and over again. In fact, Dune made it. This is a distribution issue. Dune made it to like the top watch, like the first one, when they also put it on Netflix. I made a point of that when it happened.
You're proving my. You have to be on Netflix then to be in the top.
That's a problem.
Isn't that kind of saying, to your point? I mean, like, if Netflix just makes complete and utter garbage for years and then people eventually get off it, yeah. But right now, doesn't that just point out,
Well,
like,
we named a lot of good shows. But I'm saying, like, when you have like Dune Part 1, Dune Part 2 is in theaters. They put it on Netflix. Suddenly Dune Part 1 gets viewed a lot, because that's Warner Brothers saying, oh shit. Like, by the way, I liked the Dune series, but The Gray Man, that was another good movie. That's another good movie. You should watch The Gray Man. That's a good movie with Ryan Reynolds. Great movie. Watch it with your wife.
Okay. Oh no, I think I did watch that actually. He's like yeah, no, we did watch it. It was a good movie.
I think they're gonna make another one, by the way.
Oh, are they?
Yeah, it was very successful. I hope they don't make another Red Notice. That was too expensive and not very good. But anyways, back to so I liked the Dune series, but I'm not gonna kid around. It wasn't very successful.
Dune wasn't very successful?
Dune was not very successful. Dune was successful. It was not as big of a hit as some of these other sci-fi movies.
So to be clear, you're asking like current HBO to make a movie shows, right?
Mm-hmm.
Not like if they have good shows in their catalog.
No, current.
Yeah, I mean,
Pipeline, I think, still is all right. I guess from a movie perspective.
Oh, movies. Shows.
Yeah.
You name movies from Netflix.
They have Joker. Joker's gonna be a good movie.
Yeah.
Well,
Joker,
there's one that I don't want to say because I know it's really popular, but it's Euphoria.
Say it.
I don't know if it's good, but
That's
it's
a
popular.
It's popular. It's not. I never see it in the top 10.
I hear people. I just hear people talk about it a lot, and I don't.
I never see it in the top 10.
Well, no, but like, no. This goes back to the thing. It's very, very hard for it, and it's funny because I feel like we're both like arguing a good thing for Netflix, but we're coming at it from a different angle. Because I'm saying their platform makes it very difficult to impossible for like you to have a top show if it's not on Netflix.
And that's horrifying if you're not Netflix.
Right.
Because you know what that also means?
Hmm.
I'm a storyteller. I'm a writer.
Oh, yeah.
Who's my first pick to go work for? Who am I going to pitch this story first?
Oh, Netflix.
Apple TV.
That can be a problem. That's a moat in and of itself.
Yeah, I agree with Ahmad. Like the whole thing from HBO to Max, but like no, that's why I wasn't in this company before. Like they made some blunders, they got punished.
Dude, Ahmad, Euphoria next season. Stop getting excited for Euphoria. Euphoria never makes it to the top 10. That is, I looked at Euphoria. Euphoria is like a weirdest show. It's like about depressed people and stuff.
It's like high school kids having sex. It's weird. I don't know.
You got that by the way on Netflix. The show Big Mouth. Oh my god, that's like pushing lines. That's pushing lines.
That was the comedian. What's his name? Oh, come on. I'm new here in town. Street Smarts. What's his name?
I don't recall.
John Mulaney?
Oh yeah. As far as like at bare minimum, at least voices, if I remember correctly.
But I'm trying to think what else. Netflix missed out by not getting Warhammer, if I'm being honest, and gave it to Amazon, and then Amazon's gonna botch it, maybe. And Netflix, if they just they should have not allowed that to happen in The Witcher. That's a ding for them. But okay, so you have Warner Brothers coming out, yes. But I'm trying to find like where you see how we listed tons for Netflix, and we're
but you also did movies for Netflix.
No. We
TV
named
shows,
3 movies
or series rather.
The rest were all series. I think we were well into like 15, 16 TV shows for Netflix, and those are all fairly new. They're not very old TV shows. So I'm trying to think about HBO ones.
See, this isn't fair because I need to be more familiar with the shows and watch them all the
time.
No,
I watch stuff on HBO. That's what I'm saying. Like the 2 main ones that I go to, the 2 apps that I open all the time is Netflix. Oh, sorry, I forgot Amazon. It goes Netflix, Amazon, HBO, and then Apple.
Not YouTube?
Those are the 4. No, I don't. YouTube is different. YouTube is so different. YouTube, I can watch something when I'm running, doing something. I never watch a TV show when I'm running, but if I'm sitting down, relaxing, girlfriend, it'll be a show. Mm-hmm. Narrative-based content does not compete with non-narrative, amateur-based content. Emperor Sauron, that's a problem. That's not a benefit. That's a problem.
No, I don't think it's a problem from where they're at currently, though.
How come?
I feel like that problem's already been priced into these companies.
Yeah. Let me answer this question real quick because it's a super quick answer. Within the club, yeah, we have a lot of European members who basically a lot of the write-ups are crowdsourced. So people write their pitches and people share, and there's a lot of Europeans. Myself, I tend to stay. I have in terms of portfolio allocation, I have some exposure to European, but it's not very much. I have 2 European stocks, but there has been one pitch that was interesting. Some Polish stocks that were interesting. So, anyways,
even then though, like come on, some of your biggest holdings. You mean to tell me if the EU revenue went away, their stock prices wouldn't get rightfully slashed? Let's be honest here.
So going back to the problem, it's not a problem right now because why, Andrew?
It's already priced into these companies. I don't think you're buying Warner Brothers with the thesis they will replace Netflix.
No.
I mean, maybe some people are. That's a wild thesis, though.
Okay. I would actually not be opposed to the idea that companies like Warner, I imagine licensing revenue could be very well. No, but the problem is at that point, if you really give up, Netflix could fucking just strong arm you at one point.
Well, also
that could be a problem.
Isn't that already the issue with them in Europe and stuff? Is that they don't have their app? They have the licensing there. I mean, it's not through Netflix. They're getting less from that, but you lose your control.
Yeah. And so right now it's some of their stuff goes on Netflix, some of the stuff doesn't go on Netflix. A lot of I know what some of these shows or these but it's not working. So like here, Evil. Do you know the show Evil?
No.
So Evil is about
yeah. Wait.
You know who makes it though? It's almost irrelevant who makes it because no one watches it when it's on its own platform. It's like Showtime.
No,
that's what I'm saying though. It's almost
one of the best shows ever. I think was actually made by Netflix. It's Dark.
Which? Oh yeah, Dark. Dark was Netflix. And now that I come to think of it, House of Cards.
Oh, that was an OG. That was like 2014, 2015.
I'm telling you, Netflix has bangers that put them there.
When did it come out originally?
2013. It is Kevin Spacey, who I'm not following along with what's happening to him recently, but some stuff I imagine he got like all charges dropped and everything.
Oh, he did?
Yeah. I think that was the latest update. It was like all charges were dropped. So chat can correct me on that. And it would be very unfortunate if his whole career was ruined for false allegations, and I would be rightfully pissed if I was him because I was pissed as a fan at the time because I was like, dude, House of Cards was such a great show and it's gone. And then like, Disney did the thing with not Robert Downey Jr. Oh my gosh, Johnny Depp, and now Pirates of the Caribbean's over. He won't come back because of what they did to him.
Well,
they got to probably pay him a lot more, but
didn't he also get screwed over by like the Harry Potter?
Yes, he did, which was Warner Brothers.
Yeah,
we're forgetting the best Amazon content of all time. Marco Polo.
Was that good?
Oh fuck no.
No.
No, but who cares? Like honestly, like yeah, a lot of money was probably wasted on that, but no one cares. Netflix is a juggernaut for obvious reasons.
Gil, they're making a Pirates of the Caribbean reboot, and I heard that they're gonna put a chick in it and make it gay.
Really?
No. That's just Disney's thing, man.
Yeah.
Oh,
the South Park reference.
Yeah.
Put a chick in it and make it gay. No, but seriously though, like Disney might do that. Like,
don't put it past them.
I mean,
don't put it past them at this point. They're literally gonna be like, everything that's epic and cool about Pirates of the Caribbean. Nah. You see who's the executive producer? Kathleen Kennedy. But all this to be saying, we're talking about the streaming wars, and yeah, I think all I've concluded out of this is like, damn, if Netflix ever came back down, dude, 2022 was such a special moment. You guys have no idea. Like Netflix was just like, oh.
Yeah, we still got 2024. 2024 is doing okay.
No, but like
hashtag small cap summer.
It was so underestimated, Netflix's mode. It's insane. But right now you're paying nosebleed prices for that mode. And Disney, if they just got out of their own way, they could replicate that. And then you get Amazon. But like with Amazon, you're buying everything else. So it's like, it's not a direct play on the streaming. But Amazon streaming, as we saw in the last private live stream, right? The data shows they're consistently under Netflix.
Mm-hmm.
So, actually, yeah, Marco Polo was on Netflix.
Yes, it was.
Not Amazon, yeah.
Yeah.
Okay, so
yeah,
you're thinking. This is Andrew's thinking phase.
I was gonna say, I think we've been going for 3 hours and 15 minutes.
Oh no, I'm only halfway done. No, I'm kidding.
Well, I don't have the stamina like you. I'm not young like I used to be.
10 seconds or less predictions on markets. Fun predictions. Don't take it seriously. Bacon, go.
Some days goes up, some days goes down. Okay. Some days goes flat.
Okay. And 365 days from now, are we up or down?
I don't know.
No, you have to pick one. You can be an optimist or a pessimist.
Flat. I'm going to be a contrarian.
No.
Best type of contrarian. The wrong one.
You had A or B. You cannot choose C.
I am choosing C. Better yet, why not D? All of the above. There we go.
Andrew.
Market's going to pull back 5% on this dip. Like I said, this is a fun prediction. So it's another 5%. And 1 year from now, I think stats are 77% of the time it's up. So I'll say up.
I'll say up as well.
No, you're going to say up? All right, so up, and I am all of the above.
Up. But as we see from this year with a lot of the retail investors complaining, just because the whole market's up doesn't mean you'll be up.
Yep.
Or as much.
What about yield curve? Yield curve. Some macro. Any fun predictions there? Or
It'll
screw that.
invert and die. We'll all die, but the stock market will be up, but we'll all die.
I agree.
Cool.
Yeah. There won't be food on the shelves. Buy gold, bullets, and
Bitcoin.
Oh, but no, Bitcoin, gold, and Bitcoin, and NFTs just in case.
And platinum.
Just in case that highway raider that you come across needs bottle caps just in case as well.
Palladium.
Bottle caps really important though.
I get
the
yeah.
Just in case.
Yeah.
All right. With that being said, thank you guys so much for watching, and we'll see you guys on the next live stream. If you guys are curious about the club, the link is in the description below on YouTube. If you guys are watching me on other platforms, feel free to heart it, retweet it on YouTube, like it, comment down below, etc. All that jazz. That being said, see you guys on the next one. Bye. Oh, no, we'll do an outro. We'll do it live.
Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.